Yo, what's up for y'all on the YouTube replay? I hope you are having a phenomenal Sunday. Instead of me starting this out with the normal portfolio update, let me just get into some of the stocks that I think are at pretty attractive valuations right now that I think are worth looking into. So the first stock I actually want to go over is ticker symbol FTNT. This is a cybersecurity company. The PE ratio is pretty fair for a software name, 33 PE. For a high quality name like this, I think that's pretty worth paying, or I'd especially put this one on the watch list in case this stock falls a little further. But yeah, you can see the PE ratio has kind of been trending down. They used to trade at, 40 to 60 PE. Now it's more reasonable, 33, and the EPS is expected to just keep on going up as well. First off, check this out. They're beating on every expectation every quarter. That's what the orange line is. The orange line is what the analysts expect. Notice every quarter they beat on EPS, which is net income. They beat on revenue. They beat on EPS, and they beat on EBITDA. This quarter was a triple beat. This is a cybersecurity software subscription company, and check out how their subscription revenue is doing. I love subscription model companies. It's all reoccurring revenue, and this subscription revenue literally just hits a new record every year, every quarter. That's the trend you want to see for a company with the high PE. Just grows double digits every quarter. They also have like technical support and other revenue that just grows double digits every quarter at a new record. And then they also have this product revenue. Let's see how that's doing. I actually don't know what that is. And that's up 18% year over year. Not too shabby. So anyway, if we go down here and just look at the net income, they make 400 to 500 million of net income every quarter. If we look, it says it's down 12% year over year, the net income. It's actually the same time last year, they had a one-time adjustment making the net income go artificially higher than it was. So basically the real core business actually grew 16% year over year. So that's Fortinet. That's an interesting cybersecurity name that I think is very interesting. Okay, so anywho, what app is this, please? Yeah, hey, what up, D5? Yeah, hey, actually, this is actually a brokerage right here where you buy stocks on. It's in the link tree in my bio, that very first link there. Yeah, broker called Moomoo. Hey, what up, Looney, Plasma, Tommy? Good to see you all. I hope you are having a great day. So that's the first stock I think you should put on your watch list. Ticker symbol FTNT. If you're looking for a cybersecurity name, I see Adobe, Salesforce, a lot of these software names are getting hurt. But I really think that cybersecurity is a sector that's really immune from all the AI replacement thesis. So that's the first stock. This next one is a little bit different. It's a bit discretionary, but this is ticker symbol COCO, Vita Coco. They're the number one market share, legit 45% market share for coconut water in the US. And I'm a believer that coconut water, that market share is just going to get bigger and bigger. It's a healthy drink and it tastes pretty good. And specifically, again, I don't love the beverage industry. It's super competitive, with Coca-Cola and Pepsi and stuff, but this is like a different category. It's solely coconut water, and they already have a 45% market share, largest market share. And check this out. If we go to their main brand right here, Vita Coco Water, you've probably heard of their products before, Vita Coco, the revenue is at a record up 42% year over year. Insane beat on expectations. We can see the revenue expected was 156. They reported 182. The EPS expected was 29. They did 40. EBITDA, it was a triple beat quarter, great quarter. So that's what's really interesting about Vita Coco. With these beverages, you really start out as a gross margin game, then you slowly build up your net margin. But they're already making 20 mil plus in net income a quarter, and they have no debt at all. Completely debt-free company. So that's another stock that I think is very fascinating. So, hey, what up, Trapper08? What up, Bill? Good to see you all. Jerry said, do you think Duolingo's a good buy? I actually think Duolingo's a decent nibble right here. I wouldn't go full-size position yet, but, we just looked at Fortinet, a cybersecurity name, which I think, cybersecurity, people will utilize AI to get better at hacking, and I always think cybersecurity is going to be more and more needed. But here's Duolingo right here. This is a language learning app. People go to Duolingo to learn a new language, and basically what's hurting them right now is the AI thesis that OpenAI, Google, they're both making a language learning app that's free, and people will stop maybe paying for Duolingo's premium subscriptions because this is a subscription model company. If we go to their revenue, 85% of the revenue is their subscription business, and this is why I still like this one. This is why I nibble on Duolingo right here. I love these numbers. I mean, the revenue's up 45%, after grew 48. After grew 46, after grew 49. Like the growth is insane. And if you don't pay for their subscription revenue, you see, ads, advertising, and their advertising revenue is up 45% year over year. So that's at a new record. So everything here is headed in the right direction. They beat on every metric this quarter, EPS, EBITDA, and revenue. It's just that, it's the thesis that's really hurting them for some reason. And that's why I think Duolingo's worth looking into at this price. I think they've oversold it. I think it's fully priced in at this point. But yeah, that's kind of the bad news that, hey, if OpenAI makes an app that, learn an app you don't have to pay money for. Hey, what up? Plasma said, I bought some Astera Labs, probably looking to get some more CoreWeave on the. Hey, nice. Yeah, I love pretty much APLD, CoreWeave. Those are two very similar names, both owned by NVIDIA, matter of fact. Actually, if you go to the NVIDIA portfolio right here, their largest holding is CoreWeave, then it's APLD. So that's kind of interesting. They're both kind of the same thing. Um, I sold out of CoreWeave before the drop. Do you believe in them? Hey, CoreWeave, I don't believe in them so much. It's just a data center hosting company, no real proprietary. Like, it's just a company that owns a bunch of GPUs and data centers. Um, but they're hosting big cloud, like part of the Microsoft Azure cloud and part of Google Cloud and Anthropic are all going on like CoreWeave and stuff. But anyway, here's ticker symbol FUTU. Let's check this one out, Looney. Oh yeah, then I'll get to the stock portfolio update. I haven't done that in a while, but this is ticker symbol FUTU. This, as we know, there's Robinhood. Robinhood is publicly traded. Actually, here in my Robinhood portfolio, I actually just bought 27 shares of Webull. So here's Robinhood. Here's Webull stock, which I also just bought. And then there's FUTU, which is Moomoo. It's this brokerage right here. Literally this app that I'm on right now. This software, this brokerage, it's this app publicly traded. Again, this is a brokerage where you buy stocks on, and even if this company were to go bankrupt, you're still FDIC insured for $250K. But this company is not going bankrupt at all, probably ever. I mean, look, they literally made $330 million of after-tax net income this quarter. This is what's ridiculous. The brokerages make crazy margins. They have a 48% net margin, up from 38. Like, here's the crazy part. If you go to the revenue, the sales are up 69, but the net income is up by 111, meaning net margin expansion went from 38 to 48. They triple beat on every metric this quarter. They make a lot of money from brokerage commissions and interest income. That's up to a new record. Actually, if you look in the middle of my screen right here, I don't have much cash anymore because I just spent it all on Amphenol. But if you keep your idle cash in here, you earn, like, literally for free, it costs nothing, a 3.6% APY on your cash. They earn a little APY on top of that and pocket the difference. Kind of smart. So Robin and Webull do that too. So yeah, I'm just bullish on the whole brokerage industry. I literally own Moomoo, Webull, and Robinhood stock now. I own all three of them. So, by the way, if you wanted to get any of these apps, any of these brokerages, they're all in the link tree in my bio. They're all affiliate links too, full disclosure. Yeah, my favorite one is this one I'm on right now. Okay, so can you do IREN? That's another one. These are all like the same company. APLD, CoreWeave, Iris Energy. They're all just a bunch of companies that own a bunch of GPUs. But check this out right here. They had some really big contracts. Check this out. Iron secures a $9.7 billion Microsoft Cloud deal. So pretty crazy. What I've loved about Iron specifically is how growthy they've been. If we go to the revenue literally went from 52 million to 240 million, a 4x increase from the previous year. Now, they did actually lose money on that this quarter. They lost 60 million, but this top line sales growth has just been so impressive. Plus these new deals and partnerships they're making, they're probably just going to continue this revenue growth. I don't love this name. It's tough to buy at this price, even after the little decline. But this probably will just follow whatever CoreWeave and NVIDIA do. Okay. Hey, let's see here. Mr. Phil said Pfizer stock. You know what? That's actually one of my newest positions. Hey, what up, Papa Dan? Good to see you. Zeta, please. Yeah. Hey, maybe we'll get to that one. I don't know. I don't have much thoughts on that name. So here's actually one of my newest positions right here. This is Pfizer right here. And I bought this one purely for the dividend. This is not a stock that I honestly, I shouldn't own Pfizer for my age, but I'll kind of tell you what my thought process behind Pfizer was. Pfizer, please. I'm lagging a little bit. Yeah, if the stream's lagging, then that's my fault. My internet's just always having issues. But anyway, here's Pfizer right here. If we look at the dividend, you get a 6.8% dividend yield. And I literally just bought this stock. I'm up, or I'm down 0.08. So I bought my shares on Friday. But you're basically buying this to maximize your dividend income. But yeah, so you get a 7% dividend and you get no stock price appreciation. That's the sad part. If we scroll out on Pfizer, they're literally the same prices they were back in 1998. So, no stock price appreciation since 1998, but you do get the basically 7% dividend. So you're basically buying this to maximize your dividend income. Honestly, another reason I'm bullish on them is because they just acquired Metsera, which puts them in the weight loss prescription. Yeah, Pfizer acquires Metsera for $10 billion in strategic obesity entry. So yeah, I actually really like that. So they're kind of going to be a competitor to Eli Lilly and Ozempic with this Metsera acquisition. So that's honestly my way of getting a super high dividend stock and exposure to the weight care industry, weight loss stuff. CCOI, please. Yeah, this is some dividend trap. Wouldn't really own or trust this name. I'd rather own Amphenol, Corning. This stock, another kind of like a Pfizer. They're the same prices they were back in 2003. Yikes, it's a tough one. But if we go to their dividend right here, this is the bad part. It's not sustainable. They have a 23% dividend. As you know, whenever the stock price goes down, it makes the yield go up. But they have a 23% dividend yield. Here's the bad part. If we go to first off, the lifeblood of the company, the sales, the revenue, it's down 6% after it fell 7%. So not great, but look at this. How are they paying a dividend when they lose 40 to 50 million of net income a quarter? They leveraged up their balance sheet. Look at that. They used to have less liabilities than assets. Now they have more liabilities and debt than assets. It's because, look at this. So they lose 40 to 50 million in net income a quarter. And the dividend literally cost 49 million of net income a quarter. So they need to be making 49 mil of net income to even afford the dividends. So that's just some trap. I feel bad if you own that one. I think the 55 billion backlog on CoreWeave is enough potential to have at least. I didn't know the backlog was that big. That's certainly interesting on CoreWeave. Nvidia likes them. Or NVIDIA is a shareholder of them. Should we do Nebius right here? All right, let's do Nebius right here. Another stock owned by NVIDIA. If we go to the NVIDIA portfolio down here, they own CoreWeave, APLD, and Nebius. All three of these companies are basically the exact same thing to an extent, but let's check out Nebius right here. If we go to the weekly news, I think they got a deal with Meta, or maybe that was someone else, but like a $3 billion cloud contract deal with Meta. I don't remember, but what I've loved about Nebius and all these cloud names, CoreWeave, Nebius, Iris Energy, the sales growth have exploded. The revenue went from 32 mil to 150 million. That's a record this quarter. So 150 million this quarter. Well, analysts are expecting in 2 quarters, 500 million just in that one quarter. You annualize that, that's 2 billion of revenue a year. And they're actually expected to go EPS positive in 2 quarters. Really? That is fascinating. I wonder if I don't know if that's true. They lose around 100 mil in net income a quarter, a little more than that. But the growth is so crazy. Plus the new partnerships they've gone. I wonder if it'll tell us right here on the weekly AI news. Significant partnership with Meta. Okay, that's Nebius. Interesting. So there's so many stocks I'm missing here. My bad if I don't get to y'all stocks here. Roland said CYCU stock. Hey, can you check out Webull? Hey, yeah, Webull. I just bought them. So we don't really cover these names on the channel here. If you look in the top right, the market cap, they're only worth 18 million. So I would never buy a stock that's worth that little. It's complete speculation. Yikes, so they lost 4 mil and 10 million. And so first off, the sales are down 22% year over year to 3 million, and they lost 15 million the past 2 quarters. Yeah, there's high bankruptcy risk there, or super high bankruptcy risk. Or the chances of that stock going to zero are not zero. So actually, let me look at this one right here, Rocket Lab. Remind me to get to Webull in a minute here. So here's Rocket Lab. So this is probably my favorite space stock out there because they have real revenue, real growth. They also just acquired Geost, which is pretty cool. Rocket Lab Explorer spacecraft successfully launched for NASA Mars mission via Blue Origin. Hey, that's interesting. Rocket Lab, acquires Geost and updates Neutron rocket timeline. So that's pretty interesting. Actually, let's go to the earnings over here because they literally just reported these earnings. Space Systems revenue grew 36%. Launch service revenue grew 95%. Wow. Supported by 4 Electron launches and 17 new contracts. And they have a backlog at 509 million. So if we go right here to their Space Systems revenue, which is 73% of the revenue, this is what I love to see. Look at these growth rates in the middle. 36, 28, 44, 70, 80, 90, 70. So I love these growth rates on their space systems and also their launch services. Let's see how that there. We already saw the growth rate. Yeah, up 95% to 40 mil. So a lot more consistency. They're beating on growth expectation or a slight beat. They expected 151. They did 155. They still lose a lot of money. Let's see. Yes, they're losing 50 to 60 mil a quarter. So still losing a lot of money, but as long as they can keep up these growth rates, I think they're pretty interesting. Yeah, that Geo, look what that did to their balance sheet, the Geost acquisition. Their liabilities stayed flat, but their assets just like went up by $1 billion. If you go to their cash from investing activities, let's see how much they paid for it. So yeah, they didn't pay much. They invested 203 mil. So all right, let's keep going here. Let's all right, yeah, let's do bull real quick. So here's my bull case on ticker symbol bull, and I did just buy them in my Roth IRA. I bought some more of them. We are down, let's go check. Yeah, we're down 10% on our Webull shares. So just beware, we're not doing too well. But again, we don't have much. We only have a $200 position in them. But I plan to make Webull a bigger size position. Why am I buying Webull stock and what is Webull? Well, that is actually this brokerage, this app right here, publicly traded. And I've been using Webull for like 3 to 4 years now. You can see my open profit and loss. We're only up 15% all time. So we've definitely underperformed. But what's fascinating is Webull just added in, if you look in the very middle of my screen, it says new prediction market. They added in this prediction market stuff. And if you look slightly above that, it says crypto and it says new above it as well. They also just added back crypto. So whenever you go buy and sell a stock on a brokerage, they make like a fraction of a penny. But whenever you go do this prediction market stuff and the crypto stuff, that's where they make a juice of a commission, a high margin commission. And that's the reason Robinhood stock is doing so good. Robinhood just added in the prediction market the day the Robinhood CEO tweeted they did over $6 billion of contracts. The stock rocketed, and they're making a bunch of net income from high margin crypto transaction fees and the prediction market stuff. And Webull literally just added this about less than 2 months ago. So that's why I'm more bullish on Webull than probably the analysts are. So yeah, that's kind of why I bought them. They already have some decent growth. Here's their stock right here, ticker bull. They just, on this day is when they IPO'd. Yeah, if we scroll down here, I want to show you the revenue growth. Yeah, I agree. Moomoo stock is definitely better and cheaper. And I do own Moomoo stock as well. But yeah, if we go to the revenue down here, yeah, the revenue's already up 56 or 46% year over year, at this growth rate. I think it might be even higher with the new prediction market stuff. So anywho, let's keep going here. Hey, what up? Guada said, careful with the market this week coming up. The tide is receding. Yeah. So if a rising tide lifts all boats, I guess a receding tide lowers all boats. I have 100 shares in Pfizer. Hey, nice, Mr. Phil. You could probably collect good dividends on that. Yeah. Do you like Dash or Uber better? I like Uber better just because it's cheaper. Uber trades at legit at a 19 PE. And that's real. They trade at 19 times forward or next year's net income. That's pretty fair for a software name as quality as this. They're taking in strategic acquisitions and stakes in Grab. We can see their active users. They have 189 million monthly active consumers. So not just monthly active users, but monthly active consumers, 189 million versus 161 million the same time last year. So that's at a record. Their mobility revenue and the delivery revenue, which is Uber Eats. How's that doing? Uber Eats revenue is up 29 after it grew 18. So it looks like the growth rate is growing over there. But check this out. The growth is nuts. If you go to the FCF, which stands for free cash flow, they make $2 billion plus of free cash flow a quarter, and these growth rates are nuts. And same with net income, they're making over $1 billion in net income this quarter. They had a one-time adjustment this quarter. They actually only made just over $1 billion in net income. They didn't make $6 billion. So that makes the current PE look artificially low. It says the current PE is an 11. Remember, the forward PE is actually a 19. So that's what I love about Uber. And they own Grab, give them a nice international diversification. Okay. Hey, what up, Jace? Depends on what Papa does. Hey, Papa Dan, thanks again for the gift. Seaview, dude, thanks for the roses there, too. I appreciate that one. What is it? All right. IDDV. I typed in IDDV. I could not find that stock. All right. NVO. Hey, what up, IT? Let's do Novo Nordisk right here. This is your weight loss company. They own Ozempic and Wegovy. Elon Musk is on Ozempic. So, but the reason why this stock is collapsing, first off, Pfizer outbid them to acquire Metsera, so they didn't acquire Metsera. That's a weight loss prescription. First off, wait. Novo Nordisk's heart failure prescription shows promising phase 2 results. But look at this. Pfizer acquires Metsera for $10 billion as Novo Nordisk withdrawal. So why was Novo Nordisk trying to buy Metsera, another weight loss prescription, when they already own Ozempic? Well, that's because they actually lose their exclusivity for Ozempic in about 2 years. So that's why the multiple, the PE is a 13 when the industry average is a 23. They're significantly lower valued than the industry, significantly cheaper, because the future expectation is that they're going to lose their exclusivity. They're going to lose their margins and lose the growth. And they already kind of lost the growth this quarter. If you look at the revenue this quarter, analysts expected 12.1. They only did 11.7. So that was interesting. But yeah, this is your weight loss play. Literally 93% of all the revenue comes from their diabetes and obesity care products, and they print money. They're making $3 to $4 billion. Now, do beware that this quarter, the bad stuff is starting to happen. The sales were up by 11. So the sales were up by 10%. But the profits, the net income, fell by 23. And that wasn't some one-time adjustment either. The net margins the net margin went from 38 to 26. So the net margin fell by 30%. So they might be, honestly, sadly, they might be reasonably valued at around a 13 to 15 PE, which is unfortunate. But they have a nice yield, though. All right. Yeah, hey, try not to spam there, dude. Hold on here. Yeah, ET, that's an MLP, man. That gives you a K1 tax form. You want to, unless you're fine with a K1 tax form, you buy this to maximize your dividend income. But yeah, this isn't a stock. You're actually buying units. This is an MLP, which means Master Limited Partnership. And because you're not a shareholder, you're a partner in the company. They literally send you a K1 tax form, which is notoriously hard to fill out. But because they're an MLP, you get the basically 7.8% dividend yield. Let's see. GRMN, a buy now after the 20% drop. This is Garmin. I don't know what they do. And you know what? Here's our chance to go learn about what Garmin does. I should jump over, but IDK, I think Novo Nordisk is a Netherlands stock. Yeah, they are headquartered in the Netherlands. You're right. They're an EU company. They report in euros. We did convert the currency to USD though. But here's Garmin. The PE is a 23 versus the industry average of 35. So they traded a low PE. Looks like they're in fitness, outdoor, marine. Or how's their fitness revenue doing? Fitness revenue's up 29. Wow, those are good growth rates. Outdoor revenue, that's actually down 5%. Marine revenue up by 20. They're very diversified. I like that. They have so many different segments here. Aviation revenue up 17. So let's go blend all this together. When we blend all those metrics together, the total revenue is up 11. So the sales are up by 11, but the net income is only up by 0.6. Was that real? Yeah. So their margins did fall just a slight bit. The net margin fell by 10. Gross margins fell a little, but yeah. So it looks like they did slight miss on expectations. They missed on revenue. They beat on EPS, a slight miss on EBITDA. So honestly, like it was a slight miss and the stock collapsed. Maybe there's something I don't know. Maybe they gave bad guidance as well. Interesting. Garmin, maybe we can check out their website. Oh, they're like some, I guess like Amazon thing. I don't know. That was their website. Maybe some sort of Etsy. I don't know. I believe they make GPS systems. Oh, okay. Those were watches and stuff. Maybe some GPS. Hey, what up, Logan? Good to see you, homie. Hey, it's Cat3, and I'll be watching you from YouTube. Hey, thanks for showing up to the YouTube stream. Yo, by the way, best way to support me is just watch the stream from my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can just type into YouTube Nathan Robert. And if you miss anything, you can like rewind it, replay it. So. Do you do options? I actually do not. Well, I have before, but I haven't done any options in over like a year just because I'm not good at them. All the options I've done, I haven't done too good. I've done terrible. So here's the Cheesecake Factory. So that's why I just stick to buying and holding stocks. Honestly, the Cheesecake Factory, I haven't found what people love about this stock. You know, there's this financial education guy on YouTube that promotes this one. The Cheesecake Factory isn't too growthy. They're actually the same price as they were back in 2013. So Cheesecake Factory is the same price that it was back in 2013. So it's been flat for over a decade. And here's why I think they've been flat for over a decade. They're just a slow grower. If we go to their main business, the Cheesecake Factory, you know, look at the middle here. These are low, at least it's green, but it's super low single digits. 0.5, 0.9, 0.7, 1, 3, 3, 1. So just like low growth. But they do make net income every quarter. That's why they pay a dividend. Check this out. You get a 2.5% dividend. They still make good money, 30 to 50 mil of net income a quarter. But yeah, look at these sales, 4, 5, 4, 5. So just low single digit. We really just want to see the growth come back to Cheesecake Factory. That's why I think their stock is the same price it was in 2013. If I wanted to exposure to this industry, I'd go with like a higher quality pick, like a Texas Roadhouse. What's their valuation? Yeah, look at how much better like Texas Roadhouse has done versus them. They're not at their 2013 price. They just have great management. But I love McDonald's. I don't blame them. I don't actually, Cheesecake Factory, I'm surprised they've done that well. If we look at most restaurants, like look at Wendy's. Wendy's is at an all-time low. Sweet Green, I think, is at an all-time low. To look at ticker symbol SG, which was actually, want to know something very interesting. I won't be buying this stock, but one of the insiders on the board of directors bought $2 million worth of the stock. At like 700 mil, the whole company is worth 720 million. So for him to buy 2 million of a $700 million company, he bought like 0.2% of all the shares. So that was interesting, but they're kind of like a smaller Chipotle. Even Chipotle struggling. All right, let's get off these restaurants here. Let's look at some more sectors here. Or yeah, YouTube Replay said, what do you think about Chipotle? It's at a multi-year low. Here's a quick analysis on Chipotle. Honestly, they might be reasonable. Out of all the restaurant stocks, if you're going to buy one on a dip, you want to pick a high quality name like a Chipotle, because they deserve to be doing this bad because they didn't deserve their high multiple that they did. But look at their net income. They still make 300 to 400 million of after-tax net income a quarter. But their margins are falling. So the sales are up by 7.5. But the net income actually fell by 1.4, which just means their net margin is declining. Gross margins and net margins are declining right now, which is unfortunate. But yeah, so they missed on for the past 3 quarters, they've missed on their revenue each 3 quarters. So that's why they're now at a reasonable 27 PE. Before their big gap down, this was at a 40, high 30 PE. They're now like back to reality at a normal multiple. My actually restaurant pick is McDonald's. I actually do own them, full disclosure. They've actually done very good. McDonald's is more like a recession resilient, like safety play. I get it. But yeah, we're up 9.6% on them. We also have gotten a lot of dividends from McDonald's. They pay like $28 a quarter now that I bought another share. Okay. Let's see. CSCO is one of the companies I've had on my radar. I love Cisco. I love their cybersecurity acquisition of Splunk. I used to own Splunk stock before they got acquired by Cisco. So I made it was years ago, but I made a couple $100 on that. But here's Cisco right here. This is a great, phenomenal dividend growth stock. First off, you get a 2% dividend, and that 2% dividend is completely safe. But yeah, check this out. They're in networking, services, and security. Check out their security revenue right here on an annual basis. Again, part of this big bump up is from their Splunk acquisition. But even though it's inorganic growth, it's still growth nonetheless. And this is what this company needs, growth. So if we go to their after-tax net income right here, this is after they paid $600 million of taxes. They made $2.9 billion of net income this quarter. So remember that. They made $2.9 billion. Their 2% dividend only cost $1.6 billion of net income a quarter. So they have so much room to raise the dividend. And since the dividend costs so little, they're spending over $1 billion a quarter on share buybacks. So this company just has so much leftover money to return money to the shareholder, raise the dividend, and do acquisitions like they did with Splunk. So honestly, I really like Cisco. Like kind of like IBM. If you're looking for a higher yielding name that will still have some growth, I think Cisco's a good pick. I think they're finally back to their 2000 price. Hold on. I actually want to see that. The 2000s bubble. Yeah, look at this. Ha ha ha. Look at that. We're almost back to an all-time high. Actually, we're at an all-time high when you include the dividends reinvested. But anywho. Okay. Okay. Nathan, what up, homie? He said DLO. Let's check this one out. Yeah, hey, what? Someone said, was that you that just DM me? No, hey, by the way, thanks for following me. By the way, I'll never follow you or DM you. I literally sell nothing. I have no course, book, WhatsApp. I literally sell nothing. So, yeah, I'll never follow you, DM you, not in a mean way. Here's D Local. Ooh, then we can look at, we'll look at HCA Healthcare. Hey, thanks, Craig. I appreciate that, homie. So here's D Local. This is a $4 billion company, and it says the PE ratio is a 24. The PE ratio is the price to net income plus any share buybacks or dilution, but they traded a 24 PE. They do transaction revenues, and wow, it's up 47% year over year. That's good growth. Did that beat expectations? Yeah, that sure did. Analysts expected 260. They did 280. So nice beat there. But look at where the revenue comes from internationally. So notice you don't see the U.S. and Canada on here. You know, it's Brazil, Mexico, Egypt, Argentina, Chile. So it's almost like a way to get international exposure to all these other countries, or like diversify away from the U.S. And this is in USD. The revenue's up 52. And the net income's up by 93. Wow, they made 52 mil of net income on that, you know, after paying 5 mil of taxes. Let's see. I want to check out their website right here, dlocal.com. No cookies, no. Unlocked power of emerging markets. The only buy now, pay later aggregator built in for emerging markets. So it looks like a buy now, pay later company. Interesting. Hopefully that was helpful. Hey, Sean, what up, homie? This is my new favorite hidden gem stock. Not many people have heard about this name, and I just bought a bunch of this stock in my Roth IRA. Again, our Roth IRA is just a tax-free retirement account. We haven't done too good. We're only up 2% all time. I mean, we just started it almost exactly a year ago, but we just bought for the first time ever my newest stock out of all my stocks. My newest position is ticker symbol HCA Healthcare. I kid you not, out of all the stocks I've ever analyzed, this probably has the most impressive numbers I've ever seen for any company ever. Like, it's that impressive. And that's why I didn't mind buying this stock at an all-time high. If we zoom out, you know, I'm up 1% on my shares. I bought this stock literally at an all-time high, and I didn't mind doing it because, first of all, we can see the EPS right here. EPS, or net income per share, is at a record, up 42%. But look at the free cash flow per share. It's $19. Again, the dividend cost 72 cents. And the free cash flow per share was 19. The EPS was $6. Or we can just take this out right here. Revenue is up 9.5, but the net income is up by 28. So that means they're expanding net margins. But the main reason I wanted to pull up this app is because I wanted to show you this metric specifically, the total common shares outstanding. As you know, with the company, there's like a total amount of shares that exist. This is a share buyback monster. If we look at the bottom left, the total amount of shares, there's 229 million shares. Just a year ago, there were 254 million. A year before that, 276, 333. Literally in 2020, there were 339 million shares. So it went from 339 to 229. I can't believe the share buybacks. So what do share buybacks do? That makes the EPS grow even faster than the net income. The net income's up by 30, but the EPS is up by 40. Because again, they've bought back 10% of all the shares that exist just in the past year. So it's a share buyback company with a super low dividend, so much room to raise the dividend. Yeah, check this out. If you go to the dividend, 0.6% dividend. The payout ratio is even lower than 12% now, but big beat on revenue. It was an insane beat this quarter. Big beat on revenue, big beat on EPS, and a big beat on EBITDA. They triple beat every quarter. This is why I decided to buy them at all-time highs in my Roth IRA as a never sell. This isn't some like swing trade for me. You have my, come back to my channel in 5 years if you want to hit the subscribe button. We will be holding, we will diamond hand this stock till the end of time. And I will be happy with any dip I can get on them. So yeah, if you want to learn more about this stock, go check out my most recent YouTube video. #1 market share for hospitals, surgery. Go check out it's literally my most recent YouTube video. I made it 2 days ago. Okay, so let's look at some more stocks here. Although Palantir, let's check out this one. I'd love slow down. You're talking too fast. Hey, my bad there, Clip. That was ticker symbol HCA. By the way, I apologize for talking too fast. That's just the TikTok nature of me, I guess. But I am streaming on YouTube as well. So if you missed anything, you are able to rewind it, replay it. It's on YouTube forever. By the way, that's the best way to support me. I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you, nothing like that. The only thing I do have is a YouTube channel. I'm streaming on there as well. It's called Nathan Roberts. Also in the link tree in my bio. But check this out. This is why I can't buy Palantir because of the price to sales. Not price to net income, not PE, but the price to sales is 106. They certainly deserve a high multiple, but not that high. But if we go to the revenue right here, the government revenue specifically is up 55%. After it grew 33, after it grew 12. Literally, the growth rate is growing on the government revenue, and not just the government revenue. The most impressive growth rate was actually on the commercial side, which is the other half of their business. That grew 73%. After it grew 26, like that's what's crazy. Printing net income, 500 million net income, literally no debt at all. Monster balance sheet, no debt at all. That's why they definitely deserve a high multiple, but it's still too high for me to pay. What app is that? Yeah, hey, what up? App is called. Hey, I do have Webull as well. That's this app over here. I have multiple. By the way, these are all brokerages right here. It's where you buy stocks on. They send you a tax form, ask for a bunch of information. All brokerages do that. So if you're looking for, these are my 3 favorite brokerages: Robinhood, Webull, Moomoo. They're all in the link tree in my bio. The one I'm on, actually, out of all 3 of them, my favorite one is the one I'm on right now. It's in the link tree in my bio. It's completely free, costs nothing, no commissions or anything like that. No weird fees, no monthly costs. It's completely free, and it has the best analysis tools. So yeah, okay. By the way, all those links up there are all affiliate links. So if you go and deposit $100, we'll both get some free stocks. Yo, try not to spam and chat there. Let's try and get to all the stocks here. But yeah, let's keep going here. Do you think Elf is a good buy after they acquired another company? So yeah, that's actually what I do like about Elf Beauty. They did do an acquisition. And here's how you can tell. If you go to the companies, there's the cash from operating activity, or cash from operating activities, basically the free cash flow before the CapEx. But if we go to the cash from investing activities, if a company buys an asset, buys a company, buys land, buys chips, whatever, it'll result as negative. If a company is actively selling off their own assets, this number would be positive. But they just bought a company for $600 million. They rose $600 million of debt to do that, but that was no big deal. So that's how their assets went from 1.3 to 2.3 billion. So that did hurt their net income. It says the net income was only 3 million. I'm gonna say that's probably blamed from an acquisition related cost, but who knows? And I feel like the growth should have been higher. 14% did seem a little low, even after doing that acquisition. Like I would have expected 15% growth. Well, I don't know if I would have expected. Anyway, they're interesting. I don't know, but since the net income just collapsed, the PE is going to look crazy. Yeah, 52 PE. I don't know. It's interesting. I do love that industry. Cosmetics, makeup, all that stuff has crazy margins, but they don't have margins yet. But they had crazy growth. Okay. I know Mara is a company a lot of people have been shorting. So let's actually go check out the short interest on this company. They have, a 26% short interest. So 26% of all the shares are being shorted. Oh yeah. So look, here's why. I've looked at every single Bitcoin mining stock out there. CleanSpark, HUD-8, CoreZ, Hive, Blockchain, literally Marathon. I've looked at all of them that exist. I've never seen a Bitcoin mining company that outperforms actual Bitcoin. So there's not really a world where I'd actually recommend a Bitcoin mining company over Bitcoin. Yeah, there could be a little, sometimes short-term outperformance, but it's kind of just like maybe a higher beta Bitcoin, but it's not because it's underperforming. And it's not just Marathon. I could pull up all CleanSpark, CLSK. So there's just not really a world where I'd recommend, or especially over the long run, I'd recommend a Bitcoin mining company over actual Bitcoin. So yeah, there's ClearSpark as well. It's not just a Marathon problem. What I do see a lot of these Bitcoin mining companies do, because they own so many GPUs, they normally just mine Bitcoin with it. They're actually converting into server hosting. That's what HUD-8's doing. That's actually let them have a bit of outperformance. HUD-8 is converting from solely Bitcoin mining to server hosting, like cloud hosting and stuff like that. Anywho, all right, hopefully that was helpful there. Joshua said, I'm down on SFM. Curious what you think of them long term. So I'm actually down bad on this stock as well. If we head over here back to our Webull portfolio, I love being fully transparent. Check this out. We are down 38% on our Sprouts Farmers Market. So yeah, we did not time our buys too well on this, but this is a high quality stock. Now trading at 15 times next year's net income. That's so fair for a grocery store. Not financial advice. I put this one on the watch list, but this is Sprouts Farmers Market. It's a healthy grocery store. I've been there. They did miss on their revenue slightly, but they beat on net income and they beat on EBITDA. So I don't think that this small miss on revenue justifies this stock collapsing this hard to a 15 PE. The best part about this stock is actually the share buybacks. If you go to the sales, the revenue's up 13 and the net income is up by 31, which means they expanded their net margins from 4.7 to 5.5. Again, the grocery store specifically, it's a net margin game. Kroger is legit lucky to have a 2% net margin. Costco's lucky to have a 3% net margin. So this one just has abnormally high margins for the industry, and that's why I'm shocked to see this one do so bad. Like, I really am. Like I'm actually looking to buy more of the dip on this company. Here's what this company does. Since they're making over 100 mil in net income a quarter, what are they doing with it all? Since they don't pay a dividend, they're actually doing share buybacks. Oh, we're on the wrong. We got to go to the cash flow statement. If we go right here, they bought back. I bet they're going to step up their buybacks like crazy, especially because they just the stock's just recently tanking. But they've always returned money to you via share buybacks, and they've bought back like 30% plus of all the shares since 2020. What was that stock you were talking about before HCA? Ooh, I forget there. Oh, DLO, that was D-Local. By the way, I'm streaming on YouTube as well. If you miss anything, you can like rewind. Okay, for new brokers, what is the one you're on right now? Hey, CIP, yeah. By the way, there's no burden of having multiple brokerages. It's just an extra filled out sheet of paper you just mail over to the IRS. There's literally no burden. That's why I have multiple brokerage here. I have like 4 brokerages. I got a taxable account here, a Roth IRA, a taxable account here. I get a tax return from all 3. There's no burden. But yeah, if you want to get this brokerage I'm on right now, this is actually called Moomoo. It's in the link tree in my bio, that very first link there. All these brokerages are all in the link tree in my bio. They're all great. This one I'm on right now is my favorite, most useful. It's free, costs nothing, no commissions. You get a lot of people just keep their idle cash in here for this feature. You get a 3.6% APY on your idle cash. Sadly, I just spent all my cash, bought more of MUSA. I think I bought a share of Amphenol on Thursday, another share of them. There was a nice little dip last week. I had to take advantage of them. Okay, but I am a fan of having have a little bit more cash than normal on hand right now. Okay, let's look at some more here. What do you think of Clean Spark? Yeah, I'm down. That sucks, man. Yeah. Or we kind of just covered Clean Spark. It's just a Bitcoin mining company. It's tough. BRKB is my favorite stable or favorite value / staple. Yeah, hey, this is Berkshire Hathaway. This is like an alternative to the S&P 500, and I believe since inception, this has actually outperformed the S&P 500 every year, or on average. So that's actually pretty interesting. This is Warren Buffett's company. No, Berkshire Hathaway is his company. They own a bunch of different businesses. First, they wholly own some businesses, like they wholly own Geico. So that's 27% of the revenue. They literally wholly own Geico. They own the Pilot gas stations, BNSF Railroad, all these different things. But then they own some shares in companies, like they own a bunch of Apple, they own a bunch of UNH now. And so anywho, Berkshire Hathaway is just, it's like an ETF. It's basically an ETF. It's just a different fund versus the S&P 500, and I love all their assets. When you're up 300%, do you sell? It depends. Look at Powell Industries right here. Some of my biggest regrets, I'm up, that's a good scenario. I am up 320% on this stock, and I have never taken a single dime of profit. I've never trimmed or sold a single share of this stock, and that's because they're still fair. I traded legit 22 PE even after this crazy rally. But I will say some of my biggest regrets in investing are selling my winners. Check this out. If we go over here, like look at Robinhood, we're up 800%, but we only have 5 shares left. We used to own legit like 50 plus more. Like we sold 50 shares at $36. Like we were stupid doing that. Same with SoFi. I used to own so many more SoFi shares. So some of my biggest regrets are actually selling out of high quality stocks for a profit, and then it just continued to climb higher. So thoughts on Futu at its valuation? We just looked at them. If you give me a little bit, we'll actually cover them a little later. But Futu, I think, is a steal of a deal right now. Same with Webull stock, ticker symbol BULL. I just bought some more Webull as well. Okay, hey, what up, James? He says GAMB, they charge 1 cent. Oh, hey, whoa, because of that word right there, I don't think I can cover that stock, or I don't want to get my stream taken down. So that's in the industry we can't cover, sadly. But I guess if you want exposure to that industry specifically, I guess maybe we'll call it the Vegas industry. So yeah, if you want exposure to that industry, Ooh, it looks like their net income just went negative. Is that real? Well, the profits fell 40% year over year. Anyway, actually, there's this crypto stock I really like. Let me find it for you. If you like that stock, there's one I think you like. Oh, BTM. So check this out. The stock's not terrible, but I'll give you a quick pitch. This is Bitcoin Depot. They literally just own a bunch of Bitcoin ATMs. But check this out right here. Look in the top right, the market cap. They're worth $148 million. Remember that market cap. Remember that in the back of your head. The whole company's worth $148 million. They literally make 5 to 10 million of net income a quarter. And that's real too. That's why I actually like it. Out of all the companies that are worth 145 mil, I hate those super small companies that are only worth a little, but out of all the 140 mil companies, I'm going to buy the one that's making a couple mil in net income every quarter. So yeah, they have Bitcoin ATM kiosks. Again, I don't know about the industry much. And if this is, I've even maybe ever seen one of these before. Let's hope I hope their revenue doesn't come from the US. Okay, it does. Brazil would be a good market for this. Anywho, there's one for you. You can't time the market. Hey, what up, Papa Dan? Yes, sir. Yeah, time in the market beats timing the market, I think. So, all right. Affirm here. Yeah, hey, that's your buy now, pay later stock. They actually just got profitable and they just expanded their partnership with Amazon. Yeah, check this out. Affirm Holdings extends Amazon partnership through 2031. So if you've ever been on Amazon and you're like, see that thing that's like I'm not a fan of buy now, pay later stuff. I don't do that. You try not to. At least the zero interest ones are better, but this company's finally making net income now. They used to lose a couple $100 million a quarter, was a tough buy, but now Affirm, they are making net income every single quarter. The growth is really good. Sales are up 33 after they grew 40, after they grew 40, after they grew 35. Like they're on a streak of growth. They're almost doing $1 billion in net income a quarter and they're profitable. So that's what's interesting about them. But I will say the buy now, pay later stocks, if we do go into like a bad recession, people just won't pay back their loans and that stock will get smoked. But I do really like them. The fact that they're finally net income positive, they deserve to be doing this good. Hey, what up, Pro Tonks? He said OLA, or maybe he says OLA. Or let me know if you're talking about one of these, if that's a ticker symbol there. Let me know. So, Shrinking the Chandron, how's it going, man? I was probably saying your name wrong there. Hey, Jim said, I'm buying more Reddit. Hey, I love Reddit stock. A lot of people think Reddit is just some meme company, but no, this stock has real good fundamentals. And then we'll look at Meta after this. Yeah, Meta is the cheapest Mag 7, I think. So here's Reddit stock. In full disclosure, I do own Reddit. I got 4 shares of them. I'm up exactly double on them. So we're up 100%, which is cool. But here's why Reddit isn't some meme stock. This is what's crazy. If you go to their sales, it's up 67% after it grew 67. Like these year-over-year growth rates are insane. It's because of their ARPU, their average revenue per user is exploding. They're making legit 46% more net income per user than they were at the same time last year. And they're getting licensing revenue from Google Gemini and OpenAI using Reddit as a source. And they pay Reddit for that. So if we go to their net income, this is real. They legit print net income now, and they have a monster balance sheet, no debt at all, completely debt-free company, like $2 billion plus of cash, like $2.4 billion of cash, making now probably $100 million net income a quarter. It's going to be in the future. If we look at the FCF, which stands for free cash flow, the free cash flow was up like these year-over-year growth rates, triple digit. So yeah, they're beating on expectations every quarter. Look at that triple beat quarter, beat on revenue, net income, and EBITDA. So I really like Reddit. Let's see if AI has anything to say. Advertising revenue surge, contributing to revenue growth and improved monetization. Oh yeah, they were talking about this AI stuff where basically better AI translation tools where it can translate English into other languages. So it can be daily active users increasing 19% and weekly active users reached 444 million. Pretty cool. So yeah, I'm biased, but I love Reddit. Okay. 6, 7. Okay. 6, 7. Okay, let's look at Meta right here. I think they're the cheapest Mag 7. Like the forward PE is like a 25. Yeah, the PE right now is a 26. So they're really falling because of a one-time tax adjustment. Like at first glance, if you look at their net income, it says the net income fell 82%. And it did, but it was because of a one-time tax adjustment. If you go to their operating profit, which doesn't include that $15.9 billion tax charge, they had a record quarter for Q3. Record profits, first ever $50 billion revenue quarter. The free cash flow was at a record $30 billion. But one thing investors are questioning is how much they're spending on AI. They legit start spending 21 to 25 billion on investments a quarter when it used to be reasonable. It used to be like 6-7 billion, but now 20 bill a quarter. That's a lot. That's all their free cash flow. That's all their net income, but they can afford it. So I love what they're doing. They own Threads, which now has the same amount of daily active users as X. They have the Meta Ray-Bans, which are really cool. I don't own one, but they seem cool. Like where you can like now scroll through reels and stuff on your glasses, introducing ads to WhatsApp. Anyway, is this Webull? Hey, yeah, actually, what platform is this? Hey, what up? This is actually a brokerage called Moomoo. If you want to get it, it's in the link tree in my bio, that very first link there. Free brokerage, my favorite one. But I do have the Webull, or someone said, was this Webull? I did show Webull. Yeah, I also have Webull as well. I have all these brokerages. By the way, all these brokerages are all in the link tree in my bio, and they're all affiliate links too. So if you go and deposit $100, we'll both get. Okay. Says we're good. Okay. Says we're good. Okay. All right. If it lagged, then don't worry. That was my fault. We're back now. It says it's fully streamed. So anyway, here's Taiwan Semiconductor right here. I love this stock. Yeah. Hey, Chris, we're unfrozen now. We should be good. Actually, it says we're fully good. So sorry about that. I just changed my Wi-Fi's. Okay. So here's Taiwan Semiconductor. They have a good PE, like a fair PE ratio for the industry. 29 PE. The industry average is 50. You look at NVIDIA, NVIDIA, Broadcom, AMD, crazy high PEs. If you didn't know, NVIDIA just designs the chips. Taiwan Semi actually manufactures them and makes them. And they actually just completed their first ever Blackwell chip in their Phoenix, Arizona fab, which is great news because if you didn't know, Taiwan Semi, 6 feet away from China, all their chips used to basically be manufactured 6 feet away from China in Taiwan. And it's rough, but now we're finally moving that to the US a little bit. We can see their market share for these 2, 5 nanometer wafer chips just continue to grow. And if we here's the best part about Taiwan Semi, I don't believe this. The revenue is up 35% after it grew 42. And this is in USD. Okay. So we've converted the currency from, I think, Taiwan currency to USD. But if we go to the net income, it's up 45%. They did 15 bill in net income this quarter, 14 bill, 10 bill, 10 bill. They're legit making 10 to 15 billion of after-tax net income a quarter. That's after they paid 2 billion of taxes, deleveraging their balance sheet, and you get a high yield. So you get a 1% plus dividends, like you get exposure to NVIDIA with the higher yield. So Taiwan Semi, I love this stock. It might be a little pricey here, but this is just going to continue to grow higher. Some people part of NVIDIA's moat is that they've secured Taiwan Semi's manufacturing exclusively. Okay, so let's see. Futu's a buy. Yeah, I love Futu stock. Absolutely. Or we'll cover super quickly because I got a few asks about it. All right, so here's Futu stock. If you're wondering what is Futu, actually, I'll start off with this. We all know Robinhood stock is going crazy. Robinhood is literally this brokerage right here, publicly traded, ticker symbol HOOD. They just now introduced the prediction market and crypto to the app. Webull just did the same thing, but that was Robinhood publicly traded. Here's this brokerage right here. This app I'm on literally right now. This software I'm on right now is this app publicly traded, and they traded a dog cheap valuation, a 23 PE. That's very fair. We can see again. This is a brokerage. Even if this company goes bankrupt, you're still FDIC insured for all your assets at $250K, but this company's not going bankrupt. They made $330 million in net income this quarter after, $275 million last quarter, $200 million. They print net income. They reward you every year with a special dividend. Last December, they did a $2 special dividend. So literally, actually in 15 to 20 days, we should get another special dividend announcement from Futu, which will be very interesting. I think it's going to be a record one because their net income just hit a record. It might be $3 special dividend. That'd be so cool. That's roughly 2% of your money back just instantly. Yeah, they make money from brokerage commissions. That's up 86%. They also collect this interest income right here, which is up 43%. Like these growth rates are insane. And they also, this is now their crypto revenue. It's now 8% of the whole business. Look at the growth rates. It's up 170, 100, 158. They're printing money. So anywho, I love Futu. They're expanding net margins. If you go to their net margin right here, it went from 38 to 48. I mean, that just adds money to your bottom line. These brokerages legit make crazy margins. 48% net margin on Futu this quarter. If we go to Robinhood this quarter, Robinhood stock had a 44% net margin this quarter. IBKR, this is interactive IBKR, interactive brokerages right here. Another good stock. What's their net margin? We're losing it here. Here it is. Net margin, 44% net margin. These brokerages just make a lot of money. Hey, watch out for that person in chat there. Yo, by the way, if you ever see someone in the chat's like, first 5 people to DM me, I'm giving a free, watch out for those people. By the way, I sell nothing. I'll never follow you, DM you. I sell nothing. I have no course book, WhatsApp, Telegram, literally nothing at all. So yeah, if you want to support me though, feel free to hit the like button, hit the follow button. We stream every day. We're also going to be live in exactly 7 hours and 30 minutes. We're still going to be live streaming for at least another hour and 10 minutes at least on this stream. But we're also going to be doing another 2 to 3 hour live stream at 8 o'clock tonight. Okay, so Gabriel said OMAB stock. Let's check this one out. Robinhood is so much more in 2025. Hey, yeah, hey, what up? Air Ron, did you increase your position in Bull? I did. I bought a little bit more Bull shares. So I'll share with that real quick. If we go to our, again, I don't have it as a major size position. If we go to our Roth IRA, actually my newest position is ticker symbol HCA. I am obsessed with that stock. But Bull, you know, I love all the brokerages, like this industry I want exposure to. Webull, Robinhood, and Moomoo. I own all 3 of these stocks right here because this. Okay, so here's OMAB, Central North Airport. So it looks, actually, that's surprising. An airport stock doing this well. A lot of the, well, I guess because they're an airport and not an airline, but actually this is a Mexico company. So we're going to convert their currency to USD from Mexican. So wait, let's actually check this out real quick. Yeah. It engages in operating and managing airports. So that's interesting. Let's see. Monterrey, I guess, is their main airport or something. Other 6 airports. Well, let's just go down here to their revenue and net income. So first off, they make good net income, or for the industry, you know, or consistent net income for the industry, 50 to 80 million of after-tax net income a quarter. That's pretty good. The sales are up 15, net income's up 17. What's their net margin? So actually that's surprising. Basically 30% net margins for an airport manager. Honestly, I can see why the stock has done so well. Do you get a dividend too? Hey, whoa. You get a 4.66% dividend. That's a high yield, but you've also gotten the stock price appreciation. Let's go see how much the dividend costs, just for fun to see how much they can afford the dividend. So they made 82 million of after-tax net income this quarter. And the dividend cost, okay, so 118 mil divided by 2. So basically 56 mil in net income. So yeah, they are able to afford the dividend. Not too shabby. Oh yeah, I meant to say pesos. The word just wasn't coming in my head. Harold, what up, Nick? He said Visa stock. You know, I think Nancy Pelosi owns that name. Let's actually check that out. Here's Nancy Pelosi's portfolio. She owns a lot of the S&P Mag 7, you know, Apple, Amazon. But yeah, here's Visa. She also owns PanW, Palo Alto Network. I love that cybersecurity name. But here's Visa. This is a perfect never sell stock. As someone said, is this Yahoo Finance? No, hey, that's actually, this is a brokerage right here. It's called Moomoo. It's in the link tree in my bio, that very first link there. Free brokerage, my favorite one. But yeah, here's Visa right here. Here's what I love about them specifically. Again, those small little credit card transaction fees that are slowly bankrupting us or making Visa a boatload of money. They legit make $5 billion of after-tax net income a quarter, you know, after paying, oh wow, $2 billion of taxes. Well, they must have had some other interest or something, but they made $5 billion of real after-tax net income, or they make that every quarter. And they pay a dividend. The dividend only cost $1.15 billion, so a safe 20% payout ratio on their dividend. So what are they doing with all their leftover money? This is the best part about Visa. They spend pretty much $4 to $5 billion of their after-tax net income a quarter buying back their own shares. That's why the stock has done so well. They do so much share buybacks. What do the share buybacks actually do for you? Well, check this out. If we go to the net income, it says the net income is down by 4.2% year over year. So the net income's down by 4.2, but the net income income per share is only down by 1.1 because the share part of the ratio went down. Again, the EPS growth rate and then net income growth rate should always be the exact same. Only thing that changes it is the share part of the ratio. And since the EPS fell less, so EPS went down less, which makes the PE ratio go lower, which it makes the cost of the dividend go down as well. So in short, it just makes the stock go up. So yeah, Visa is a great never sell stock. It should just keep up with the S&P 500. It's just like a quality name that deserves its high multiple. It's called Moomoo. Yeah, hey, it is trained. Yeah, this is a brokerage called Moomoo right here. They ask for a bunch of information, send you a text from it. Yeah, it's my favorite brokerage. Or all these brokerages are all in the link tree in my bio. I got Robinhood as well and Webull. They're all great. Yeah, I'll give you a quick portfolio update. Or by the way, the market isn't open right now, but it will be open at 8 o'clock, and we will be streaming for that. But yeah, our Webull account, we're only up 15% all time in here. Definitely underperformed in this portfolio. This is actually our risk on account. We kind of just do whatever we want in here. But in our Robinhood account, if you look in the top left, this is called our dividend only portfolio because, as you can probably guess, every single stock in here pays a dividend. But as you can tell, most of these are like dividend growth companies, Meta, Google, Constellation Energy. Google is now our largest holding in here, and it grew to that way. I can't believe it. Google has been an absolute monster of a performer. And actually, Berkshire Hathaway, Warren Buffett's company, just bought Alphabet or Google shares on Friday, or they didn't buy it on Friday, but it was disclosed that they bought it. That's why, if you're wondering how are they up 4% after hours, it's actually because Warren Buffett bought Google. Can you believe it? So not too shabby. Actually, I wonder if it's updated over here. The latest super investor changes. So view Warren Buffett's latest changes. New? Yeah, look at this. It has updated. His newest position is Google, and he didn't add any new positions as well. But let's see what he increased. He bought more Chubb, Domino's Pizza, Lamar. What did he decrease? VeriSign, DaVita. He decreased Apple. Again, he sold 42 million shares of Apple. That's only 0.3% of his position. Or sold out. What did he sell out of? He sold out of D.R. Horton. Anyway, that's okay. What happens? Hey, again, this is actually a software where you buy stocks on. It's in the link tree in my bio, that very, very first link there. The Robinhood's the second link, Webull's the third. They're all I'm not sure which one, but this is my favorite one right here. It's free, costs nothing, has all the cool super investor trackers. Link tree in my bio, first link there. All right, let's see here. Prediction market is a business in itself. Yeah, I've never done that. Or I think I've done one. But for fun, like $50. But yeah. Let's see. Is Visa or MasterCard better? They both move nearly identically. They're both a little different. MasterCard, did you know this about MasterCard? We go to their revenue. They're really an international play because only 30% of the revenue comes from the US, while 70% comes from other countries. That's why people actually like MasterCard more than Visa. They're also another share buyback monster. But yeah, they're both just very quality. It isn't available in EU. Ooh, I don't think it is available in EU. I don't know. Yeah. Yikes. So someone said IWM. Hey, what up, Iconic? Oh, that's the Russell 2000. So unfortunately, this ETF won't, I don't think, ever outperform the S&P 500 in the long run, simply because of how it works. There's a lot of zombie companies in here, and whenever they're no longer a small cap, they get removed. So it literally... The reason the S&P 500 does so good is because it lets its winners win. Like Nvidia's its largest holding. It's because it's market cap weighted. Imagine if this ETF can sell out of us, like they can trim their Nvidia. But anyway, check this out right here. It just owns a bunch of small caps. A lot of these companies are zombie companies though, which means their net income doesn't cover even the interest expenses on their debt. But yeah, these are all the holdings in here. I do like some of these, Kratos, Sterling's a good one. Oklo, not good. IONQ. I think Amazon just sold their stake in IONQ. This is a quantum name. Anyway, that's the Russell 2000. If you're just looking for an ETF to buy and hold forever, I'd rather go with the NASDAQ 100 or just the S&P 500. Also, check out QQQM. If you've heard of the QQQ before, this is actually the lower expense ratio version of it. It's the exact same NASDAQ 100 strategy. Again, NVIDIA is the largest holding because it's the largest stock by market cap. So it lets its winners win. That's what I like about these strategies specifically. Unlike SCHD, for example, some of these ETFs, like its largest holding used to be Broadcom. That's what I loved about this stock. Its largest holding in here used to be Broadcom. They sold their Broadcom for a 200% gain. And since then, it's like tripled again. So, okay, let's see here. ACMR stock. I think that might be a coal play or no. This is ACM Research. They're actually on my watch list. I don't remember what they do. Single wafer cleaning, that revenue's up double digits year over year. And electrochemical plating, that's up, wow, 73% year over year. That's a big growth rate year over year. So that was analysts expected 250. They did 269. So they beat on revenue, slight miss on net income, and a slight miss on EBITDA. So that might have actually been why the stock fell on a gap down on earnings day right here, because that was a weird, very small net income miss, but it was a big EBITDA miss. That was a bit strange, but anyway, yeah. So look at this. If you don't look at the net income, it says the net income grew by 20, but the core business, it actually fell by 34%. So yeah, the sales grew by 31, but their profits fell by 35, which is weird. So yeah, their gross margin went from 51 to 42. That might explain it. I don't know though. The growth there of their electrochemical plating business was really good, 72% year over year. Beware of this. 99% of all the revenue comes from China. I actually did not know that. I might actually remove this one from my watch list. So, it's like some wafer cleaning company. This is their website, I guess. Anywho, they are Chinese, or they're HQ'd in the U.S., Providence, California. But 99% of the revenue is China. So I wonder about that. American Express is good too. Here's another. Speaking of the fintechs one, someone said I own SoFi. I buy every time it dips. I also am a shareholder of SoFi. I'm an idiot. I regret every share I've ever sold to SoFi. We only have 24 shares left. Like same with Robinhood as well. We have 5 shares of Robinhood left. Yeah, we used to own like 55 more, like way more shares, but we were an idiot and sold most of our Robinhood and SoFi for a profit. That's a lesson that I'm glad to know now. Like, let your winners win. That's where the value is made. Like after you're up double on a stock, whenever a stock goes up 1%, you go up 2%, which is really cool. And then it just compounds higher. So anyway, here's SoFi Technologies. We're up 4x on our shares. They deserve this sort of momentum and this high valuation that they have. There's a lot of stocks out there that don't deserve their valuation because their numbers don't align with it. Like in the long run, the financials in their fundamentals, like it move the stock either up or down in the long run. Like it can't be momentum forever. It's financials. It always explains it. And this is what I love about SoFi. If we go to their financial services revenue, they're a fintech. They have their own banking charter. They got it through a loophole that's now patched because of them. Literally, their financial services are up 76%. After they grew 101, after they grew 140, after they grew 290, after they grew 289, they're on a monster streak of growth. Literally in 2020, the revenue was 11 million. Now for the full year 2024, it was 820 million. Just this quarter, 420 million. If you annualize that, that's 1.2 billion. There's crazy growth on SoFi, and that's beating all analyst expectations. No analyst expected that. We can see what the analysts expect every quarter. Every quarter for the past 3 quarters, huge beat on, that's the EBITDA. Beat on revenue, beat on EPS, and on EBITDA. They triple beat every quarter. And that's why I think people are taking SoFi serious. They're making 100 mil in net income a quarter, or 140 mil in net income this quarter. I love SoFi. Growth is there, net income's there, margins expansion there. They're great. What is IDEXX? We'll check this one. IDEXX stock. Okay. Here is IDEX Laboratories. They're a big company. Wow, $55 billion market cap, and they just gapped up on earnings. Check that out. Let's go look at what their earnings were because they must have been good. Dang it, AI. There's no AI analysis on it. Yeah, dang. So they're not that popular, but Companion Animal Group. So that's up 13% year over year. Actually, what do they do specifically? It looks like diagnostic research. Or maybe you can check out their website right here. We help pets live fuller lives by giving them tools. I don't know, maybe some DNA. I don't know, some sort of animal healthcare system. Let's go check out their margins. What's their net margin? Wow, 25% net margins on this company. So the sales are up 13. And the net income's up by 18. So yeah, they legit make 200 to 300 million of after-tax net income a quarter. Yeah, that's after they paid 70 mil of taxes. So, wow. Did they pay a dividend? No dividend on this company. So they're probably doing share buybacks. Here's so you can tell at a quick glance if they're doing share buybacks without having to go to the cash flow statement. If we just go to their net income, it says the net income is up by 17.9, but the net income per share is up by 21.4. So that's insane. They've bought back 3 to 4% of all the shares. Here's another way you can tell. So they're making 300 mil in net income a quarter. Just go to their cash flow statement, estimated retirement of stock. Yeah, they're spending 2 to 400 million of their basically leftover money on share buybacks because they don't have to pay off debt. They don't have a dividend to pay. Like they're in a good position. Yeah, cool. Okay, let's see. Can we look at APLD? Let's go check it out. 30% of my portfolio is IDEX. They make stuff like x-rays and other medical devices for animals. Hey, thanks for that, Nick. Yeah, they certainly look like a cool company. So APLD, this is actually a stock owned by NVIDIA. So if we go to the NVIDIA portfolio, their largest holding is CoreWeave. I saw Aiden say CoreWeave. And their second largest holding is APLD. By the way, these are two like nearly identical companies. They do the exact same thing. They just own a bunch of data centers and servers, and but they actually just got a big deal. Yeah, so CoreWeave's revenue forecast cut affects APLD. They're very interlocked. They have a big partnership together, but so I'm trying to find the deal they just got. Will it tell me on the earnings hub? Okay, so let's see. HPC, their data center hosting business, contributed 26 mil, representing 40% of total revenue. Okay, data center hosting. It's not telling me the growth rate, bro. Okay, so look, 60% of the revenue is their data center hosting, and then the other businesses, their high performance compute, whatever. But check out the most recent quarter specifically. The analyst expected 45 mil. They reported 64 mil. So that was a big beat on revenue. They lost less net income than expected. Analysts expected them to lose 13 cents. They only lost 7, but there was a miss on EBITDA. So anyway, this is a data center hosting company. Nothing super blowing me away. That was a great beat on expectations. So I will say if they continue that, I mean, the stock will probably continue to do good as well. But NVIDIA owns them. Honestly, I don't know. Nokia stock. Hey, what's the ticker? I think it's NOK. Here's Nokia stock. Actually, if you're wondering why did the stock gap up, well, it's actually because NVIDIA took a stake into this company. I think they bought so Nokia and NVIDIA form a $1 billion strategic partnership. Well, not only that, but NVIDIA bought, I legit think, $1 billion of Nokia stock. And that was a big chunk of the company. It was like 30 billion. So they bought 1/30th of the company. Let's go see what the earnings report was on top of that. So network infrastructure revenue grew 11%, benefiting from increased demand in AI cloud sectors. Their optical networks achieved 19% revenue growth, reflecting strong market. AI cloud infrastructure partnerships now contribute 7% of group revenue, supported by new semi facility. Interesting. So if we go to their net income right here, if you average it out here, they're actually making like 100 mil of net income a quarter. So they are making net income every quarter. But if we zoom out to the stock right here, of course, this is kind of going to be obvious. But, Nokia is the same price that it was back in 1998. Obviously, they lost the war of smartphones to Apple and Google. But looks like they're not in the smartphone industry anymore. They're in this network infrastructure, mobile networks, cloud and network services. Anywho, only it looks like 26% of the revenue comes from the US, FINRA, and anyway, interesting. I don't know if I'd buy them after the rally. ACMR is a weird one. I'm really in two minds about the dip. Yeah, it's interesting. Ooh, Lost said Celsius. ISRG is a cool robotics medical company. So here's Celsius Holdings right here. This is that drink company. If you've heard of Celsius, Alani, or Rockstar Beverage, they're now all owned by Celsius. So Pepsi just took a 7% stake into Celsius, and for that 7% stake, they didn't pay them all with money. They gave them the Rockstar Energy brand. But if we just look at them, this is the best part. The main Celsius brand, the organic Celsius brand, grew 44% year over year. And Alani grew 114%. They just bought Alani last quarter. But if you look at this right here, their profitability declined, had a $250 million one-time adjustment because Pepsi's buying the a big stake in the company. Pepsi's now agreeing to distribute and manufacture like the drinks for them. So they're terminating their old agreement with their old company. So so here's how you can tell. If we go to their net income, it says they lost 61 mil in net income. You can tell it was a one-time adjustment because you go to the operating profit, they actually made 166 mil, and we can just see the revenue growth again, led by inorganic acquisitions. But the sales are up 172. The profits was 166 mil on that. And again, this says they lost 60 mil because of the one-time adjustment. But yeah, if you go to the cash from investing activity, they spent 1.3 billion last quarter buying Alani. There's Alani. They own 8.7% of the shares. Pepsi should show up here soon. But anywho, I actually think they're worth looking into on the dip. It might not be worth full porting. Like, I'd nibble on it here. It might fall a little lower. Like, a lot of the discretionary kind of food stocks are struggling. Actually, Monster's done very well. Look at Monster Beverage. I think they hit an all-time high. MNST on Friday. A lot of tech was red, but look at Monster Beverage. All-time high. That's a monster performing stock. Another one, I actually own the Coca-Cola bottling company, ticker symbol Coke. They bottle for Monster. They also bottle for Dr. Pepper and Coca-Cola. Obviously, they're at an all-time high. So these drink bottling they've done very well. Actually, part of this is because they bought back 20% of all the shares, but what app are you using? Hey, yeah, what up, Crispy? Hey, this is actually a brokerage right here where you buy stocks on. It's called Moomoo. It's in the link tree in my bio, that very first link there. Brokerage where you buy stocks on my favorite one. Hey, what up, Spread the Wealth? How's it going, homie? Yeah, let's do CoreWeave right here. You know what? We haven't looked at CoreWeave yet, I don't think today. If we go back to NVIDIA's portfolio, literally their largest holding is CoreWeave. They've been struggling hard. This is your data center hosting company. I think they got some new partnerships. Let's go down here. No, let's just look at the earnings hub. Let's see what they reported on earnings. Revenue growth was fueled by large contracts, including a $14 billion deal with Meta and a $6.5 billion expansion with OpenAI. So those are two great customers you want to have. But look at this. Their backlog, their contracted backlog nearly doubled quarter over quarter to 55 billion. So 55 bill of future revenue. So I just love this one because of how growthy they are. If we just go to their sales, the revenue's up 133%. It went from 580 to 1.3 billion. Again, they just IPO'd, so there's not, wow. Look at it, in 2023 it was 116 mil. Now it's 1.3 billion. So it's a record quarter, 1.3 billion this quarter. But look at what the analysts are expecting in 2 quarters. Again, partially from the OpenAI new Meta deals, that huge backlog, but the revenue is going to be 2.4 billion. But if you're wondering, why did the stock fall on such great news? Huge revenue growth, huge backlog growth. They actually said they have all this backlog growth, but they're not going to be able to fulfill it as fast as they thought. They literally said they don't have enough workers to complete the builds and stuff like that. Look at this right here. CoreWeave reduced its full year revenue forecast due to data center construction delays. So there's some sort of delays, workers, I don't know, but that delay spooked investors a bit. But that backlog is marvelous. All right. Okay. Yeah, DK&G we can't cover because of the industry, sadly. They're in the Vegas industry, and TikTok doesn't like when I cover that. I'll be back. Hey, thanks, Nick. Thanks for showing up. Yo, by the way, if you want to hit the follow button, we stream every day. I legit sell nothing. I have no course, book, WhatsApp, Telegram. I'll never, ever follow you or DM you, nothing like that. What app do you use? Yeah, hey, again, this is a brokerage. It's in the link tree in my bio, that very first link there. It's where you buy stocks on. This is my favorite app to buy. Zero fees, cost nothing, called Moomoo. Link tree in my bio, first link there for my affiliate link. So if you go and deposit $100, we'll both get some free stocks. I love CoreWeave. It's my biggest position right now. Oh, hey, nice, Plasma. That backlog certainly was fascinating. And they do lose a bit of money. But here's Lyft right here. I'm a fan. I think Tesla should legit buy Lyft. I think that would be a nice synergistic acquisition. But Lyft expands autonomous vehicle operations with strategic partnerships. I think they partnered with Waymo. Yeah. 15 million Nashville depot for Waymo collaboration, Baidu's Apollo for UK robotaxi services. That's actually pretty fascinating. So these Uber type apps can take advantage of the robotaxi service and don't have to pay a driver if they just put it on their own network themselves. But check this out. You see the revenue's up 10% and they're just now getting net income positive. This is why I think they're finally a justifiable buy. If we zoom out on this company, they used to just burn money forever, a couple $100 million net income a quarter. But now they're finally making consistent money. They've made net income the past 4 quarters, every quarter. What are the analysts expecting? EPS? Yeah, they've been beating on EPS expectations every quarter, and it's expected to continue to climb higher. higher. So certainly interesting. Yeah, that year-over-year comp for Q1 is going to be fascinating. What about free cash flow? Yeah, they print free cash flow, a couple hundred mil of free cash flow. So honestly, sadly, I think I like Uber more. Uber, I think, is, even though Uber is like way more higher in market cap, they're cheaper valuation. Um, okay. Hey, what up, Joel? So can we look at ANET, Arista Networks? Hey, Wassinator, what up, homie? Says, I'm hoping for a better next week. Yo, me too. Honestly, if the market does dip, though, I will be happy to buy the dip. So here's Arista Networks. I did buy a little bit of the dip last week. I'll be super quick, actually, if anyone wants to know what I bought. I bought Iron Mountain, HCA, Webull, Amphenol, bought a lot of stocks. So here's Arista Networks, though. I love this stock. $160 billion company. They definitely deserve their high market cap. You know, that's a massive market cap. They sell these AI products, but check out the growth rate. And this is beating all expectations. They grew 25%. After grew 20, after grew 27, after grew 67. So the product revenue is at a record, and not just the product revenue, but also their services revenue. That grew 38, after grew 28, after grew 33. So that's beating on expectations. So, and revenue is expected to go from 2 billion to 2.45 billion. EPS expected as well. So if we could just go to their net income down here, this is insane. And this is after tax. You know, that's after paying 100 mil of taxes. They're making legit 800 plus million of after tax net income a quarter. And at this growth rate, what's it going to be the same time next year? Plus a phenomenal balance sheet. They're investing in the future. They're buying, like, they spend nearly $1 billion a quarter buying new assets. So honestly, I love Arista Network. I like that they don't pay a dividend. Like, they're just a growthy name. Valuation might be a little high, but they definitely deserve a high multiple. You know, 49 times their basically 900 mil of net income a quarter. I definitely put them on the watch. They're a quality name. Which company? That was ANET, Arista Networks. Yeah, I want to see some buyers off this low and get into CoreWeave if I can remember. What's your favorite Monster Energy flavor? I don't know. I don't know their exact names and stuff. I like the white Monster, like the white can. Or I guess I think that's a zero sugar one. Okay, let's see here. Oh, what up? The homie Random is in here. Let's see. IREN, this is kind of another competitor, or kind of does the same thing as CoreWeave, does the same thing as Nebius and stuff. But yeah, check this out. Iris Energy secured a $10 billion Microsoft Cloud deal. So some of the Microsoft Cloud servers are going to be hosted on Iris Energy's data centers, which is pretty cool. But check this out right here. Here's what I loved about them even before this partnership. They've just been a growthy beast. I mean, their revenue is 240 mil, up from 50 mil, up from 34 million. So the revenue is at a record 240 million. Well, the analysts are expecting it to hit 285 million in 2 quarters, plus this new Microsoft Cloud deal. Plus, I think they have some other deals. They're still struggling with staying profitable. Like, they lost money this quarter. Yeah, anyway, like if you go to the operating profit, like they lost 60 mil, but the other 3 quarters, they did make real money. So anyway, yeah, that balance sheet's crazy. So yeah, that's Iris Energy. I don't know if I'd buy it here yet. Let's see. How about Geraldo said, can you look at KTOS? That's Kratos Defense. They have this like government software. They also have a small drone business. They were able to like negotiate higher prices with the government, which was really interesting. If you go to the Kratos Government Solutions right here, the 2 quarters specifically were really impressive. It's up 23%, and last quarter it was up 29%. We go to the analyst expectations right here. You know, the orange line is what the analysts expect every quarter. Last quarter was super impressive. They expected 305. They did 350. And this quarter they expected 322. They did 347. So they've been massively beating on all the metrics. So beat on revenue, beat on EPS. Here's their unmanned systems. This is their drone revenue. Looks like that did actually hit a record. I don't think it's never been above 87 million before. That grew 35% year over year. The only tough part is the valuation is insane. They make like 5-10 mil a quarter, but the PE ratio, it's like 557. They need to like quadruple net income for it to get even somewhat reasonable, which they might do. I don't know. But they're definitely interesting. I love the growth there. They have good customer, the military. Someone said ticker symbol cold. Hey, what up, Mitch? Xping. Hey, give me the ticker symbol. We'll check out which stock you want to look at. Give me a ticker symbol. We'll check it out for you. So here's Americold Realty. This is a real estate investment trust. So you're kind of buying this to maximize your dividend income. Yeah, if you go to the dividend yield, they have an 8.5% dividend, but it might not be sustainable, as we can tell by the stock price. Again, whenever the stock price goes lower, that makes the yield go higher. What you focus on, let's just check out the revenue right here. The revenue is down 1.5. What do they do? They're a warehouse REIT. So a warehouse REITs, let's see. So the numbers are a bit choppy. They make, it's so hard to average out. You're like 80 to 90 mil a quarter. Or the dividend is 66 million. I don't know. I'd be careful with this name. Out of all the REITs that exist, my personal favorite one, and it actually has still a pretty good yield, a 3.5% dividend. This is the only REIT I own. I've looked at all the REITs out there that exist. This is my favorite REIT of all time. Ticker symbol Iron Mountain. You get a good 3.5% yield and good stock price appreciation. And I'm totally biased, but I literally just bought another share of them on Friday for $90. Then I bought one at 96, 103. So we're kind of dollar cost averaging down into our position there. But yeah, and someone said CRMD. Yeah, we'll cover CRMD, and then we'll look at XPEV after this. What app is this? Yeah, actually, this app I'm on right here is called Robinhood. It's in the link tree in my bio. It's like the third link there. For this, these are all brokerages right here. You know, they all ask for a bunch of information, send you a tax form. This is my favorite brokerage right here. Robinhood's nice. This one's called Moomoo. It's the very first link in the link tree in my bio. This is where I do all my analysis on because they're the most useful. So here's Cormedics right here. There's a high short interest on this company. Legit, if we look, 20% of all the shares are being shorted. So there's a big bear thesis. But here's what I love about this stock. If we look at the market cap, this whole company is worth 885 mil. Remember that number. The whole company is worth 885 million. They legit make 20, and this was real, 50 million of net income this quarter. So if we go to the PE ratio, the price to net income, they trade at 4 times PE, or that's the price to sales. If you go to the PE, they trade at 5 times PE, 5 times net income. It's the valuation is dog cheap, and there's there's 100 mil of debt, but they just acquired a company. No big deal at all. I just love this stock. Everything about this company. They finally are selling something. They have 104 mil of sales. They made 51 mil of profits on, like, the free cash flow is a record. Everything about Cormedics I love. And again, as much as I love Cormedics, I don't have them as a major size position. As much as I love this company, I don't think I can make them as a meaningful size position. I got $500 of them, but they're certainly worth owning, I think, as a little size position. I have a lot of those kind of stocks where I don't want to have it as a major size position, but I definitely want exposure. So if we scroll down here, like Super Microcomputer, I like the company, but terrible financials it's hard to trust. PSIX I really like, Toast, Clear Secure. I love all these names, but I don't want to trust a lot of money in them. So I just put a small amount where I still am happy because I own some, but it won't destroy me if it goes to zero. Okay, so here's Xping right here. This is kind of like a Chinese Tesla competitor. They sell electric vehicles, stuff like that. Xping shows strong growth. Well, let's go check out their earnings results. Looks like they just reported earnings. Wow, look at the analyst expectations. Revenue was 18 bill this quarter. It's expected to be 25 bill in 2 quarters. Net income is supposed to go positive for EPS. Revenue is projected to double year on year, driven by record delivery. Oh, this is in the future. Okay, I guess we can kind of see what the analysts are saying or whatever. But so they actually report earnings what day? On the 17th. Oh, so tomorrow. So beware, buckle up. They report earnings literally tomorrow. So expect a lot of volatility. Oh, we were looking at that in Chinese. So the revenue is supposed to be 3.5 billion. This is in USD. What I like about this one as well is, like, if you look at Tesla, or actually not Tesla, if you look at Rivian, Lucid, Neo, they burn through so much unsustainable net income. Well, this one doesn't. They're really narrowing their losses. I mean, if they lost only 66 mil, down 62% at this, they might even get net income positive, and they have a record backlog of orders. The sales are really growthy. So they're just some Chinese EV vehicle car manufacturer. Interesting. Okay. Can Oracle turn things around this quarter? That's Oracle is seen as almost like a mini OpenAI like short, people are saying, that's what I've heard. Oracle has an insane like 300% backlog. What people are worried about Oracle is all the debt they have to pay, and it's going to be tough to pay. Yeah, Oracle's debt load surges among massive AI infrastructure plans. Okay, but here's so they have around $100 billion of debt. Okay, or just over that. They have $100 billion of debt, and I think it's now going to be even like $16 billion more. But we'll just go with the random number. They have $100 billion of debt to pay, and they make $3 billion, or it's just over that. If you average out like $3.2 billion of net income a quarter, so they make $3.2 billion of net income a quarter. Well, they actually don't, because they pay a dividend, and the dividend cost $1.4 billion. So go ahead and basically subtract 40% from their net income that gets eaten to the dividend, because they have a small dividend for the payout ratio that they have, a 0.8% dividend, but a 40% payout ratio. But Oracle, they have a huge backlog. Like their revenue is literally expected to like triple through like 2030. Cloud, yeah, it's like a pure cloud play. Cloud and service business. So yeah, I don't, if I wanted cloud exposure, I just would probably, but Oracle's good, but I have Google for my Google cloud exposure. Microsoft has their cloud, and I also have the AWS with Amazon. That's actually the most valuable part of Amazon, if you didn't know, is actually their AWS business, which did 33 bill of revenue, like 130 bill a year. I mean, it's over 100 billion. That's their highest margin business. It's crazy. All right, we'll look at some more here. Let's see. Thoughts on Open Door? Well, this is your interest rate sensitive play. As rates go lower, this one, I guess, should in theory do better. You're not buying this one for the fundamentals and the financials, because the fundamentals are bad. But it's like a swing trade play. If we go to here's what happens. Basically, if we go back to 2021, 2022, when rates were zero, the growth was crazy. They were doing 4 to 5 bill of revenue a quarter. But look what happened when rates hiked up really quickly in a year. Sales plummeted. Sales fell 63, 69, 70, 50. And so the sales have fallen off a cliff. The sales are only 900 mil this quarter. They lost 100 mil. Like, they're losing net income every quarter. The revenue is expected to go to 500 mil next quarter, then 800 mil. So the projections aren't too good, but it's basically just an interest rate sensitive play. And we can actually see the rate cut probability odds. If you go to the market right here, stocks, yeah, it's at the very bottom right here. So yeah, look at this. On the December 10th meeting, which isn't that long away, less than a month away, there's a 40, actually, the odds have changed. There's a 44% chance of a 25 basis point cut, 55% chance of no cut. Then in the January 28th meeting, 50% chance of another 25 basis point cut. March, another 43. So, and that's just based off the Fed dot plot expectations. But anywho, that's your interest rate sensitive real estate play. All they do is flip houses. I've been to a few Open Doors. They're not great at it. They're not good at it, really. TNDM stock. What's this one? Tandem Diabetes Care. Let's check this one out. I see you have Coca-Cola. I need to find an entry. Well, actually, I have the other Coca-Cola. We'll check them out after this. Yeah, so here's Tandem Diabetes Care. So they're a $1.26 billion company. That's not too big of a market cap. But supplies and other, looks like that revenue did hit a record. It's up 9% to 140 mil. It's never been at that high before. They also have a pump revenue. Pump revenue actually fell by 4% year over year. So that did still beat expectations. They beat on revenue, they beat on EPS, and they slight beat on EBITDA this quarter. So it looks like it was a good quarter overall. That might actually be why they've only been up since their earnings report. So that's interesting. Are they making net income? So bad news, actually really bad news. They're losing a lot of money. They've lost like 200 mil the past year. Yeah, the whole company's worth 1.2 billion, and they lost 200 mil just in the past year. So we really want to see them narrow these losses. That's probably why the stock isn't done too well. So yeah, I actually own Coca-Cola, the bottling company. It's ticker symbol COKE. But the main company, the one that everyone knows, is actually owned by Warren Buffett. If we go to Warren Buffett's portfolio right here, his fourth largest holding is ticker symbol KO, the main Coca-Cola company. And this is the one with the crazy high dividend. Actually, Coca-Cola is a great defensive name. If we go to their dividend right here, you get a 2.83% dividend. So you basically get a 3% dividend. And then you also get about 3 to 4% in stock price appreciation every year. So in a total return, you should just get around 7% of your money back every single year. And it's like a defensive name too, a staple. So yeah, I do not expect this company to outperform the tech-heavy S&P 500. It's not going to outperform the S&P, but it's kind of like a safe name that you can just sleep very well at night knowing. I mean, look at the net income. They're making $3.5 billion net income a quarter. So Coca-Cola is interesting. Hood or SoFi for the future. Hey, what up, Seawall? I actually own both of those. I own Hood and SoFi, and those are two stocks I regret every share I've ever sold of. So I like both. All right. Okay. Check out CHYM. Hey, I like KOF. Hey, we'll check that one out too. I haven't heard of that one, I don't think. So here's Chime Financial. They just IPO'd like 6 months ago. So that's pretty interesting. On December 9th, the lockup expires. So that means basically whenever a company IPOs, the insiders, all the people working for the company aren't allowed to sell the stock until after the lockup period. And when this expires on December 9th, usually that's when a lot of selling happens and the stock starts to fall just from insider selling, taking up the order book. But check out the expectations here. This is great. Revenue is going to go from 528 to 628 mil. So revenue is expected to keep on growing. They're expected to narrow their net income losses. So they're not expected to make net income yet. This negative 900 mil in net income, that was their one-time IPO fee. So don't worry about that 900 mil loss. They didn't actually lose that. But I think that's a great balance sheet. Wow. This might be like a buy now, pay later stock, but I know it's just like some financial, mobile, kind of credit card app. This stock or this looks just like ticker symbol Dave. They remind me just like Dave. And I actually am a big shareholder at Dave. Let's see what their website looks like here. Yeah, dave.com. Let's see. Yeah, their website looks like almost identical, like same colors and everything. Same images. Anyway, I do own Dave stock. And Dave trades at a 19 forward PE. That's after this crazy stock price appreciation. Only traded 19 PE. That's an interesting one. Same with Sezzle. SEZL is really interesting. DJ Daniel said Root Insurance Company. Yeah, this is your direct to consumer insurance play. So they've actually they were almost priced for bankruptcy, but then they had a lot of growth. If we go to their sales down here, their revenue, check out these year-over-year growth rates. Like if you zoom out, the revenue, they were declining, 70 mil of revenue a quarter, declining every quarter. But now look what happened in just a year. The sales went to they're now 300 mil a quarter at some nice year-over-year growth rates. And on top of that, looks like they lost net income this quarter, but they're usually consistently making now positive net income every quarter, 10, 20 mil. Maybe there was a little one-time adjustment this quarter. Or no, the net income was negative. The EBITDA, earnings before interest and taxes, was only $300K, but that beat the analyst expectation. They expected them to lose 7 mil. So yeah, they actually lost less net EPS and net income than expected. Very interesting. So yeah, this is your... we can just kind of see it down here. Provides direct-to-consumer insurance products. Yeah, the revenue spiked up right here. I wonder if it was some acquisition or I don't know. Anyway, there's your root for you. Okay. At K said Shop stock. Yo, I love Shopify stock. That's a big Kathy Wood play as well. If we scroll down here, that's her fourth largest holding is Shopify. I used to have a Shopify store. Even I paid for the largest subscription and given them that monthly subscription revenue, they still take 0.25% of every single transaction, every thing that you sell. So they basically collect these high margin royalties. But one thing I love about this stock is look at the annual growth of their sales. Like every single year, the revenue just hits a new record. So that's what I love about Shopify. And if we go to the FCF, which is free cash flow, they're printing free cash flow every quarter, like 400 or 500 mil. Same way, they had a little one-time adjustment to their net income. So we'll look at the operating profit. The year-over-year growth rates have been phenomenal. They're also making a couple hundred mil of net income every quarter now. So Shopify deserves to be doing this well. I absolutely love them. I don't know if I'd buy them here, but definitely great company. Um, hmm. Um. Oh, Meta, please. Yeah, hey, Meta. This is a great, like, cheapest Mag 7 play. What app is this? Yeah, hey, Apple user, by the way, or this app I'm on, or this actually a brokerage software. It's in the link tree in my bio. That very first link there, if you want to get the software I'm on. It's where you buy stocks. So here's Meta Platforms. Very fair PE. They're trading at 26 times PE, and that's actually artificially high because of, again, the PE ratio. The PE is the price to EPS. And the EPS, or it's just net income, the net income fell by 82% year over year, literally from a one-time adjustment of $15 billion tax charge. So if we go to the operating profit, which doesn't include that one-time adjustment, it was actually a record for Q3, 20 bill of net income. The sales were 51 billion, first ever $50 billion record quarter. Cash from operations or free cash flow was a record. Another thing investors are questioning about Meta is how much they're spending on AI and chips and stuff, and if they're going to get a real return. Look at this. If you go to the cash from investing activities, they're spending 21 to 25 billion a quarter for the past 4 quarters on AI. They used to, there's like when they were spending on the metaverse, investors didn't like that, but now they found a new thing. As long as they get real returns on this, it should be good. They can easily afford to do it. There's some companies out there, like with the economy slowing down, people are spending more on advertising. Like actually, OpenAI, which owns ChatGPT, now they're now have Facebook ads about ChatGPT. They didn't have to do that before because of word of mouth, but now they're buying ads on Facebook. But yeah, they own WhatsApp. They have the Meta Ray-Ban glasses. They own Telegram. They're introducing ads to WhatsApp. They own Threads. Someone said Neo. So Neo, this is another ADR. So you're paying that yearly fee, but this is a Chinese stock. They're the same prices they were back in 2020. Just not a good company, I think. They just burned through a lot of money. Or if we go to, again, they're a Chinese company, but we've converted their currency from Chinese yen or Chinese yuan to USD. This is in USD. They literally lose 700 mil to 900 million of net income a quarter. So they're losing, 800, 900 mil a quarter. The whole company's worth 15 bill. It's tough. Like, they really need to narrow those losses. What's the balance sheet look like? Yeah, actually, they've been diluting the life out of you. Check this out. They diluted you by 3 billion, 1.5 billion last quarter because they had more liabilities than assets, but because of the dilution they're diluting you at all-time lows. It's a tough one. I wouldn't own them. Did they have liability in California fire? I don't remember what we were talking about there. My bad there. Hey, what up, Peter? Yo, we just looked at SoFi. You give me a minute there. We'll check him out a little later. What's a good robotics play? First off, Amazon is the best robotics play. Obviously, Amazon isn't a pure robotics play, but they're helping out, or Amazon has their warehouse robotics and stuff. But here's another warehouse robotics company that actually helps out Walmart. I've looked at all the robotics stocks. Like, there's a lot of trash ones. Ridge Tech Robotics. Like, this company right here has 1,500 registered patents, and legit 13.5% of all the shares are owned by Walmart. So Walmart is the second largest shareholder. The goals are aligned because Walmart uses them. Walmart's a shareholder helping out their logistics hubs with robotics. But check out the growth. They have real revenue growth. The sales are up 26 after they grew 50, after they grew 77, after they grew 33. So the growth is insane. Analysts expected 533. They did 590. So that's honestly my favorite pure robotics play. My favorite robotics is Amazon, but that would be my second fave. There's also I don't remember, ISRG. This is another cool robotics play, but they're a medical. Okay. Hey, I missed your Sidera. I don't know what that is. If you got a stock you want me to look at, give me a ticker symbol. We can try and check them out for you. Hey, what up, Taco? So, how's it going? Can you explain why Wayfair goes up? It's a horrible company. This is some like furniture, I think, company. They're the same prices they were in 2018. What's the short interest? Actually, the short interest has gone down, but 15% of all the shares are being shorted. Looks like there's some momentum recently. Let's see if we can figure out why. See if AI has anything to say. Nope. Maybe the tariffs or something. I don't know. If we go to their net income, it looks like, oh, wow. So the past 2 quarters, when you exclude all the adjustments that they're having from like debt payments and stuff, look, they have double the amount of liabilities as assets. How are they going to pay off all this debt? Well, I guess now that they're finally making some money, but interesting that the past 2 quarters, Wayfair actually the business did make money the past 2 quarters. So that's certainly interesting. Huh. I still wouldn't buy that name. Huh. Yeah. Some interest rate sensitive company, maybe interest rates too. So, just got bought by Merck. CIDARA. So CDTX. Oh, if they got bought out, so look at this. Very nice. Look at that. So if you're wondering why does the stock it's being bought out at $217 a share. So there's no real upside if you buy it here. But wow, congrats if you own this name. That's very interesting. Looks like they're getting bought out. Yeah, congrats if you own them. Um, I keep getting QQQ. Uh, actually, instead of QQQ, here's a interesting thing. Buy actually QQQM. It's the exact same ETF as QQQ, run by the exact same Invesco people with the exact same NASDAQ 100 strategy, the exact same holdings and weightings, just with the lower expense ratio, 0.15% lower expense ratio fee. So for every $1,000 you put into this versus QQQ, you save $15 in yearly expense ratio fees per 1K invested. Not too shabby. SYM is a warehouse. Yeah, hey, nice, Mitchell. Or Mitchell, what's up, dude? Um, uh, let's see. I can tell that bro is, hey, what up, no nonsense? All right. Amazon, SoFi, Microsoft, Novo Nordisk. We haven't covered Amazon at all today. You know what? Let me give you a quick pitch for Amazon. If you have the intention like me to never sell Amazon, like it's worth going ahead and nibbling at this price. Like they're not even ridiculously overvalued. They're trading at 33 times PE. Let's actually check out the earnings hub. What do they have to say? AWS increased 20% year over year. Operating income was okay. Oh, it's one-time special charge. But yeah, basically what's so cool about Amazon is actually a lot of people know Amazon for their online stores, Amazon.com, that's 40% of the revenue. Then they have their third-party seller services, so helping out those sellers with their logistics and stuff, and they take high fees on that. And then they have the AWS, this is the most valuable part of Amazon, their Amazon Web Services. It's legit, well over $100 billion of annual revenue for them. 33 billion just this quarter. So if you annualize that, that's insane. This is their highest margin business. They're not making too much net margin shipping you a package overnight in the same day or whatever. Not too much, like super low net margin maybe, but this has high margin. Oh yeah, they're also an advertising company, subscription model with their Amazon Prime, Twitch Prime, physical stores. That's legit an ETF in one. E-commerce play, book play, robotics play, cloud play. They're literally an Oracle Cloud, a UPS, a Walmart, grocery store play, all in one, Instacart. Like, I just love everything about Amazon. And if we go to their net income down here, 21 bill of net income, up from 15 bill of net income, up from 9 income. Oh, I think this thing just freeze for, okay, we're back. They're making insane net income, 22 bill. Deleveraging their balance sheet, investing in the future too. They don't pay a dividend or do share buybacks. It's because they're investing so much in the future. If you go to cash investing activities, investing in AI and stuff. So you just don't want Amazon as competition. So yeah, I love them. Yeah, it's like it's an ETF in one. It's like you get exposure to Instacart, you get exposure to Etsy, you get exposure to Walmart, in a real estate company, in a robotics company, in a subscription model, in an advertising company. It's like a trade desk and an Oracle. It's legit. Never sell Amazon. Beast of a company. Okay. Mag 7 too. Can you do ALAB? Let's check out Astera Labs. Hey, we actually just looked at Cormedics like 10 minutes ago. If you give me a minute there, 1.5, we'll actually cover Cormedics again. But my thoughts on Cormedics are really, I'm totally biased, but I do own 51 shares of Cormedics. I bought a little bit of them last week. Their earnings were really good. I really like their earnings. So that's a stock I'm never selling. But here's Astera Labs right here. They're actually partnered with ARM on developing like a new chip or something. But check this out. Let's go look at their earnings hub right here. What happened? Revenue growth of 104%. Wow. Triple-digit growth was driven by Aries PCLE 6 solutions ramp up, strong demand for Toros, Ethernet, smart cable modules, and expansion via Xscale Photon acquisition. Well, hey, that's actually really good. So yeah, we can see the analyst expectations. That's the orange number there. They beat on revenue, double on EPS, beat on net income, and on EBITDA. Triple beat every quarter. They said, yeah, look at the net margin. So they're making net income. Yeah, look at this. So the sales are up by triple digit. Sales have doubled, and the net income is 91 mil. When this same time last year they lost money. So anyway, that's just insane. I really like Astera Labs. Oh, and just a cherry on top is just this absolute fortress balance sheet. 1.13 bill of cash. That cash made them 11 million of interest on their cash because they have no debt, no negative interest payments to pay. So cool. What happens is, hey, what up, Jacob? Yo, hey, actually, if you want to get this, there's actually a brokerage right here where you buy stocks on. It's in the link tree in my bio, that very first link there. My favorite brokerage. Full disclosure, it is an affiliate link, so if you go and deposit $100, we'll both get like some free stocks. But yeah, free brokerage. Here's the Vanguard Energy Index Fund. So yeah, this looks just like Chevron and Exxon combined. Let's go see what his top holdings are. Yeah, Exxon, Chevron, that's just those two are, basically 40% of the whole ETF. Then you get it's because it's market cap weighted. Then you get some of the other names like ConocoPhillips, EOG. I freaking love EOG Resources. If I had to pick out of all these names, I'd probably pick EOG out of every one of these on the list. But yeah, if you don't know which oil energy stock to pick individually, you can just buy the ticker symbol VDE. It's like the whole sector. I actually just bought, this is a more convenient store, but I actually just bought ticker symbol MUSA, Murphy USA. So, and the reason I like this one specifically is because it's an oil stock that doesn't suffocate themselves with the high dividend. A lot of people love the oil stocks because they're high yields, like Warren Buffett. If you go to the Warren Buffett portfolio right here, his fourth largest holding is Chevron. And Chevron has a crazy 4.3% dividend. That's what people love about oil. Again, oil will never actually outperform the market in the long run. Like again, if we go back to that ETF right here, ticker symbol VDE on the monthly, this ETF is the same price that it was back in 2014. So this ETF has literally been flat for a decade. You're not going to outperform the tech-heavy S&P, but you get that defensive dividend. You get a 3% dividend, and oil does good whenever there's war fears, inflation fears, whatever, currency fears. Oil usually does good in those environments. So it's like a defensive name that it's nice to have as a small diversification part of your portfolio that you shouldn't expect to outperform. What happens is, yeah, hey, T, again, if you want to get this brokerage I'm on, it's actually or if you're on TikTok, it's in the link tree in my bio. If you're on YouTube, it's actually in the link in the description. Yes, sir. So yeah, it's a broker called Moomoo, it's where you buy stocks on, my favorite brokerage. Okay, so let's see here. Hey, what up, Free Me? Good to see you, homie. Hope you're having a great Sunday. All right, so Desmond said, what is this one? Bull stock, yo, I'll be really quick about Bull. This is one of my new positions in my Roth IRA. I now have 27 shares of Webull. Why did I buy Webull? Because I think they're going to grow faster than the analysts expect. And they're also they're at an all-time low on Friday. They hit an all-time low. We're down 10%, not crazy. But here's why I'm buying Webull stock. And Webull stock is literally this app, this brokerage right here, publicly traded. Webull literally, for the first time ever, it says new prediction market. They just added this prediction market stuff, which will make them a lot of money. And they just added crypto back to the app. Because whenever you go buy a stock or sell a stock on a brokerage, they make like a fraction of a penny. But whenever you go do this prediction market stuff and the crypto, that's where they make a juice of a margin. So that's why I'm bullish on Webull more than I think the analysts are. All right. And again, as much as I love them, I only have like $250 of the stock. Best dividend stocks. Well, hey, actually, in terms of best dividend stocks, these are my personal best of my favorite dividend names. I actually have a portfolio. If you look in the top left, it's called my dividend only portfolio, where I have a portfolio specifically where every stock in here pays a dividend. And these are my favorite dividend stocks, Meta, Google, McDonald's, CEG, United Rentals, all these pay a dividend. So yeah, not too shabby. I think we're getting a dividend. Yeah, we have a $14 dividend incoming from them. United Rentals, we have a $9 dividend. We get like $10 a month in dividends from McDonald's. We get a lot of nice stuff. Hey, what up, Ken Murphy? How's it going, man? Yeah, no problem, T. Okay. How do you feel about AMD's PE ratio being so high right now? Yeah, AMD is definitely not worth buying at this price. It auto-corrects me every time. Please, AMD. All right. So yeah, I am a shareholder of AMD. We bought them at 50% lower than it is today. We're up pretty much we've doubled our money on AMD. But yeah, the PE ratio, 122 PE. Well, what's the forward PE? That's really what you want to look at here. And so here's why I still can't pay for AMD. They currently traded 122 times net income, Well, they trade at 97 times next year's net income, still ridiculously overvalued. But one of the reasons the stock rallied up so much is because OpenAI actually now owns 10% of AMD. OpenAI owns 10% of AMD, and they're going to be ordering a bunch of AMD chips. So pretty much pumping up their orders. So yeah, they have their data center business, which look at that. It's up 22% year over year to a record 4.3 billion. It's never even been over 4 billion before. So 4.3 billion on the data center, their client and gaming. Look at that. It's up 72% to 4 billion. Again, they have a high multiple because they're high growth. Look at that. So they're beating on growth every quarter, or that's the orange line. They beat on revenue every quarter. They're in an EBITDA, but they're still too expensive for me to add more. They have a really good balance sheet, no net debt. Actually, what I've liked about AMD is I always thought they were an easier double than NVIDIA. If we look at the market cap of AMD, they're worth $400 billion. So if you buy the stock right now, for you to double your money, they have to be worth $800 billion. But if we head over here to NVIDIA is worth $4.6 trillion. So if you buy the stock right now, for you to double your money on NVIDIA, they nearly have to be worth 10 trill. So it's kind of a harder double just from the law of large numbers on NVIDIA. So that's actually why I chose AMD. Again, wouldn't buy AMD here. One stock, another company I paid a super high valuation for. I didn't mind buying more of this stock is Amphenol, another super AI beneficiary. Instead of buying NVIDIA, and buy some of the NVIDIA beneficiaries like Amphenol. Amphenol is the one that supplies NVIDIA the copper cables. Just bought another share of them on Friday at 135. Didn't feel great about it because, our cost basis is way down here. But again, I focused on quantity of shares over, how much I'm up on a stock. Even though I'm up 105% and I have 25 shares of Amphenol, the person with 26 shares of Amphenol and they're down on their position is beating me. Hold on to AMD. Yeah, I agree. Even though AMD is a bit pricey, I'm not certainly going to fully sell out of them. I did trim like a fractional share, but definitely not selling out of AMD for sure. I'm holding on to them. I love that my Google position just keeps beating the market. I agree. Google is now my largest position by far. It took over McDonald's, Constellation Energy, and it grew to that position. If we go to our total return, here's my total return on every stock. We're up $2,400 on Google. No other stock. I guess we're up $2,000 on Constellation Energy. But Google has been freaking a beast. So we're up total almost double. We're up 77% on our Google shares as well. Year to date, we haven't done too great year to date. We're up 11% year to date. Well, I guess that's certainly better than the April dip. Y'all remember April, the tariff stuff? We were down 13, 14%. Now we're up 11. So hey, okay. Let's see here. Have you added to your main position? Keep buying the dip. Ooh, free me. You're not gonna. Sadly, I sold out of my Main Street Capital. I've actually made quite a bit of changes to my Roth IRA. I know you haven't been here for a while, so check this out. My Roth IRA probably looks completely different. I actually sold all my Main Street Capital to fully maximize my Iron Mountain position. It's another higher yielding name, 3.5% dividend yield. And I bought a bunch of HCA Healthcare. This is now like my favorite stock of legit, like legit all time. Like in terms of financials and numbers, I don't think any other stock in my whole entire portfolio that has like impressed me as much as HCA's numbers. Maybe Comfort Systems, but even their share buyback, like HCA I bought HCA at all-time highs and I didn't mind doing it. Curious on what you think of SoFi right now. All right, let's cover SoFi. I saw a few people asking about SoFi. What up, Ken? So yeah, what up, David? Let's check out SoFi right here. I do own SoFi, another one of those stocks that I regret every share I've ever sold of. If we go, I own a lot of the fintechs right here. I own Hood, SoFi, Dave, and Futu. They're all they're all like similar. But yeah, I regret every share I've ever sold of SoFi. We're up 4x. Same with like Robinhood. We used to own like 50 plus more shares of Robinhood. So, but I trimmed SoFi a while back because I didn't think they'd do this good, but they deserve to be doing this well. They're not propped up on momentum. They have great financials that justify their stock price appreciation. This is a fintech. They have their own banking charter. If we go to their financial services specifically, this is what justifies the crazy high multiple. The revenue's up 76, after grew 101, after it grew 145, after it grew 287. Like they're literally on a streak of growth. It just hits a new record every year, every quarter. And that's beating expectations. The orange line's what the analysts expect. They beat revenue every quarter. They beat on EPS every quarter, and they beat on EBITDA every quarter. So no wonder they're gapping up on earnings. And they're really making real net income, 140 mil of after-tax net income this quarter. That's why I think people are taking SoFi serious. They're growthy. They're making net income. They're really good. But I still want to touch to buy meaningfully at this price, I still couldn't do. SoFi trades at 75 times next year's net income. So to buy meaningfully here is tough, but I just expect them to continue to do good. Papa Dan says sold my Nvidia. Yeah, hey, you could sell your Nvidia and trade it in for like a. Again, Nvidia. The only reason it makes sense because it's hard to double this 4.6 trill market cap. They'd have to go to 10 trill. It might be like for the long run better to buy maybe like an Nvidia beneficiary. And also, actually, here's my prediction. I might actually clip this. Actually, I hope this isn't true because you just sold us, but here's what I think is going to happen next week. I think NVIDIA is going to go back. Here's what's going to happen. I think NVIDIA is going to report earnings. They're going to go to 220 a share. I think they're going to go to all-time highs. That's my prediction. Somewhere around 220, I think is going to happen to NVIDIA. So I am super curious to see what happens again. They report earnings on the 19th. So 16, 17, 18, 19. But I think, actually, this is going to kind of massive prediction here. I think they're going to go to 220, hit an all-time high. But that's going to be the permanent all-time high on NVIDIA, maybe. I don't know if they'll ever... Actually, I don't want to speculate, but... Okay, let's keep going here. What stocks do you have? Hey, yeah, these are all the stocks that I own in here. And by the way, if you just go to my YouTube channel, I do stock portfolio updates all the time. I got way too many portfolios to share with you every stock I own really quickly. But yeah, I'm fully transparent. I'll share with you every stock that I own. I do that on my YouTube channel and on the live streams. I do it at the beginning and end. Oh, yeah, but... Anyway, yeah, my YouTube, by the way, that's the best way to support me. I literally sell nothing. I have no course, book, WhatsApp. I'll never, ever follow you, DM you. The only thing I do have is a YouTube channel. So if you do want to support me, just subscribe to my YouTube channel. Try to build up my viewers on there. I don't get many viewers on there. It's called Nathan Robert. It's also in the link tree in my bio. But what up? Anthony said ticker symbol is ZIP. I forgot. I didn't even know the stock was public. This is ZipRecruiter. Let's check this one out. This is a, very small company, $360 million company. Are they losing money? So yeah, this is probably why the stock's at all-time lows. They're worth 360 mil, and they're losing 10 million in net income a quarter, which is 40 mil a year, which is well over 10% of the entire market cap. So they lose 10% of the whole entire market cap a year, and they've leveraged up. Look at this. So they now have quite a bit more liabilities than they have assets. How are they going to pay off the 650 mil of debt when they lose 10 mil a quarter? Are they growing their sales at least? Is the revenue growing? And so all that bad news, all for the sales, the lifeblood of the company to be negative. The sales are down 2% after they fell 25. After they fell 28. No. So yeah, this stock probably, they deserve to be at all-time lows, sadly. What is Amprius? Hey, I saw someone say Amprius. If you got a stock you want to look at, give me the ticker symbol. We'll check it out for you. In Nebius, we'll check out Nebius real quick. Nebius is actually owned by NVIDIA. I think they just got a big Meta deal. You know, NVIDIA owns CoreWeave, APLD, and Nebius. All three of these companies are nearly identical in what they do. CoreWeave, APLD, Nebius, nearly the same company, but they just have different customers. And I believe this company just got like a major contract from, I think, Meta. I don't remember. But let's go check out their most recent earnings hub. They got a $17 billion deal from Microsoft. So Microsoft gave them a $17 billion deal. They gave CoreWeave a $10 billion deal, cloud deal. But check this out. Revenue growth was driven by AI infrastructure demand, significant partnership with Meta, though capacity constraints limited full revenue potential. Ooh, so maybe that might be why the stock is falling on earnings day. Let's go see what they reported. So the revenue, wow, 150 mil of revenue, up 355%. So the revenue was 146 mil, a record. Well, check out what analysts are expecting in 2 quarters. They're expecting the revenue to be 477 million. So again, that's probably from the Microsoft contract deal, recognizing, and they're actually the EBITDA, right now they burn money. They lose like 100 mil. Look, if we go to the operating profit, they lose 100 mil a quarter. Looks like analysts are expecting them in 2 quarters to only lose 6 million. So they're supposed to significantly narrow those losses. So anyway, that's what's interesting about Nebius. NVIDIA owns them because they don't want them to do bad. Kind of props up NVIDIA stock when CoreWeave and Nebius and Iris Energy do good. So here's HCA Healthcare. This is my newest position. Hey, free me here's the main thing about this stock. And I'm going to be super quick about this stock because actually, if we look at this stock right here, I'm only up 1% on my shares. I bought them at an all-time high and I didn't mind. Oh yeah, the PE ratio is a 17. They traded a 17 PE. The dividend cost 72 cents a quarter. So the dividend cost 72 cents. Look at the EPS they made. They made $7 of EPS or $6.95 of EPS, but look at the free cash flow per share. Just $19. They can pay for their entire year of dividends, like 4 times over just this quarter. But here's the best part about this stock specifically, why I bought them. If we go to their total common shares outstanding, look at it in the bottom left. There's 229 million shares. That's down from 255 mil shares, down from 275, down from 330. Literally, they've bought back 30 to, or actually 40, probably 30% of all the shares just since 2020 Q4. Like the shares went from 339 to 229. It's insane. And the dividend, how much does the dividend cost? The dividend only cost 166 mil. So the dividend only cost 166 mil in net income a quarter. Look at how much they're doing on buybacks a quarter. 1 to 2 bill of buybacks a quarter. They're just upping the buybacks. So this is just what you call a shareholder friendly company. They can easily afford it too. Remember, the dividend only cost 166 mil. They made 1.9 bill in after-tax net income. The free cash flow was 4.4 bill. Anywho, this is a hidden gem healthcare stock. Again, it's at all-time highs. It deserves to be, but this is the kind of stock that's just going to continue to hit all-time highs. 17 forward PE, so much room to raise their dividend. Like I'm going to have a 2 to 4 to 5% dividend yield on cost one day on HCA Healthcare. So actually, if you want to learn more about them, learn about how they're the largest market share for hospitals and specialty hospital groups and surgeries, #1 results for hospitals in the country. Check out my most recent YouTube video about HCA. By the way, my YouTube channel is called Nathan Roberts, also in the link tree in my bio, but you just type into YouTube, Nathan Robert. My very most recent YouTube video is me covering HCA and some other stocks too, but mainly HCA. And it's just like this style where I just do it on my phone. I screencast my phone into the video like that. Yeah, if you want to support me, best way to support me, just subscribe to the YouTube channel. Trying to build that up because I don't get many viewers on my YouTube channel like I do on TikTok. So yeah, I appreciate everyone that's here though. So let's look at TTWO. Here's a very cool stock. And yeah, by the way, I saw nothing. I have no course book, WhatsApp, Telegram. Oh yeah, we'll look at AMPX after this. My bad there. We'll look at AMPX after this. But here's Take-Two Interactive. This is the company that owns Rockstar Games. So if you've heard of GTA 5, Red Dead Redemption, they own that. They own those. But here's what was the bad news and why they fell on earnings. You guys ready for the super sad news? GTA 6 is now delayed until November 2026. And that might even get delayed even more. But we now have exactly 1 year delay. Or pretty much in exactly 1 year is when GTA 6 should be released. Again, the reason why the stock is at an all-time high is because they're in such a unique position. They have this asset, this game they're about to release, that whenever they release GTA 6, it's literally going to bring them in billions of revenue. But that's why the valuation's so high right now, because right now the numbers are bad. We go to they're losing a lot of money every quarter, but actually the sales did grow 31% year over year. But we're kind of just waiting for GTA 6 to get released. What other games do they own? They own, I don't remember. But anyway, yeah, Red Dead Redemption, GTA 5, and GTA 6, which is cool. All right. Let's see. Okay, there's a lot to see here. Could you look at QFIN and Beta? Yeah, we'll look at Beta after this too, or not Meta. Or beta, or beta. Okay, we'll check. AMPX. I'm getting so lost here. We'll look at AMPX. This is an ADR. Looks like some Chinese company. Whoa, they're the same prices they were when they IPO'd in 2019. So the stock's been flat for a while. Looks like they reported earnings on the 18th. So in 2 days, you're really waiting for earnings. So first off, they're Chinese. So we're going to convert the currency from Chinese yuan to USD. Yeah, 100% of all the revenue comes from China. But here's the fascinating news. If we just judge them off their financials, this is great. The revenue's up 27, net income's up 27. They legit make 200 to 300 million of net income a quarter, and that's in USD as well. Let's see what they do. Oh wow, and a 5.8% or 5.6% dividend, safe payout ratio. Let's see what they do. Credit tech platform, financial institution, loan life cycle, borrower acquisition, preliminary credit. Well, anyway, seems like some Chinese fintech company with a nice yield. They always just trade at low valuation. So AMPX. So this is Ampress. Yeah, this stock is on my watch list actually, because I do like this company. Check this out right here. So sales of battery products, again, very small company. I would not have this as a meaningful size position. And again, the market cap, what is it? Yeah, they're a $1.4 billion company. So a small market cap, but check out what the analysts are expecting and check out how they beat on every analyst expectations every quarter. Analysts expected 16 mil. They reported 21. Expected to be 23 mil. And if they beat on every metric, wonder what they're going to do. And they're barely losing any money. This is also another good part. They're still losing a couple mil every quarter, but they only lost 4 mil. I mean, that's a sustainable loss. Like, and it's narrowing at this rate. Like, they're going to be net income positive somewhat soon. Fortress balance sheet, I think they did just dilute you to do that, though. Yeah, they issued 30 mil of shares to fortify their balance sheet. But anyway, I like that they're barely losing any net income. I like the growth. Like, look at the sales growth. Again, it's small numbers. It's easy to grow, but the revenue went from 7.8 to 21 mil. That's why out of all the, micro cap stocks out there, this one's one of the better ones just because they have real growth. And that's why the chart looks a lot better than a lot of the momentum names now. So, how did you predict InnoData from a few months ago? Well, I really didn't. It's kind of the same way I'm predicting HCA Healthcare right now. I'm just like, I'm looking at their numbers. I'm like, this stock seems fairly undervalued. I think this is the kind of stock that's just going to continue to climb higher. And actually, InnoData hasn't done too well the past month, I think. Yeah, they're down 27% the past month just from the whole AI stuff. But yeah, we're still up 72% from our original cost basis. We're doing great on InnoData. But yeah, InnoData, they just announced a new federal contract program where they're expected like 26 mil of new revenue from the federal government. Their digital data solutions revenue hit a record. They're a data labeling company. Check out the analyst expectations. First off, they beat on revenue. They beat on EPS by legit double or almost double, and on EBITDA by nearly double. It was a great triple B quarter. Analysts expecting 72 mil in 2 quarters. So I like this one because they're making net income every quarter, fortifying their balance sheet, making free cash flow every quarter. I just looked at their numbers and I said, hey, the numbers are good. And that's kind of what I think about HCA and a lot of other stocks too. Like, I think Weeble's going to do good. For my own little Red Dead Redemption 3 announced. Really, Mitchell? I didn't know about that. Let's check out Beta right here. So there's Beta Technologies. Looks like they just IPO'd. So we probably won't be able to look at too much data, unfortunately. They're a $7 billion company. So service revenue, again, they just IPO'd. So let's go down here. Say half. Can we do look at in quarter? So they don't want to give it to me quarterly. US company, right? No. Yeah. They're in Burlington, an aerospace and defense company. Let's go to their website, beta.team. Let's see what this company does. Aerospace manufacturing. I don't know. Looks like electric planes, or I don't know. Yeah, maybe some sort of electric planes. 188 square foot, net zero manufacturing space, US listed. Yeah. Okay, whatever. I don't know too much about that, but looks like some electric aircraft manufacturer. I don't know, product revenue. Again, they just IPO'd, so I wish I could look at more revenue, but the revenue is only 15 million, saying for the first 6 months of this year, which isn't much. Very small company. Ooh, so is that Camping World? Yo, I hope it's not. Yo, this Camping World next to my house, dude, like, it's always just full of inventory. Like, they're not selling anything. Yeah, here's Camping World. It's basically, if you ever see those, like, it's like a big parking lot with a bunch of RVs, and you can like go rent or buy an RV from them. Yeah. It's not a great business, Let's go look at their numbers. I think they're struggling. So revenue. Okay, so revenue's up. Revenue's up 4.7. Are they net income positive? So look at the choppy net income. That's the bad news because they have a crazy yield. Look at this. So a 4.7% dividend. Notice the dividend changes every year. Look, it went up and then it went straight down. But yeah, if you don't make consistent net income, you can't pay a dividend. Like, they made 60 mil, but then they lost 30, 25, 60. So they're not making any net income. And let's go see how much the dividend costs. So, okay, the dividend costs 10 million a quarter. Again, they're not making that a quarter, but the dividend, wow, that's actually 10 mil for a 5% yield is low, but they're not probably going to be making that. I wouldn't trust that one, really, unfortunately. I actually one time I bought a put. I haven't done an option in a really long time, but I bought a put on them and made like 20%. I'm like, I only did it because I was driving by. Like, anyway. Okay. Is Amazon a good or bad buy, brother? Hey, if you have the intention to never sell it like me, Amazon is one of the best stocks to just buy and never sell. I'm such a believer in them in the long run. Yeah, just buy and never sell them. All right. Oh, I can't say that name. Okay, what up, dude? You said Kex. Yeah, Kex is like a cool oil stock, I think. Or this is Kirby. Let's go analyze them. I forget exactly what they do. I know there's some sort of oil and gas related company, or Kirby, or maybe it's a transportation company. So yeah, I think like they're an oil and gas, like yeah, marine transportation. What are they called? Oil tankers or something. Anyway, oh look, we can see the earnings presentation. Let's go look at their earnings presentation. I love doing this. Third quarter EPS up 6%. Power generation revenue up 56. Well, that said from data center uses. Well, let's go check out their, yeah, the firm transports petrochemicals, black oil, and refined petroleum products primarily. So yeah, marine transportation. So yeah, that's flat year over year. You know, this benefits from all the supply chain logistics issues, Red Sea shipping stock list. Oh my goodness, I have to go in 2 minutes. That's so sad. Oh no. Distribution services up 12% year over year. 100% of the revenue comes from the US, but this is the good news. They're still making like 50 to 100 mil of net income every single quarter. So that's the good news here. So that's probably what beat expectations. Anywho, yeah, I got to go in 2 minutes. So, hey, by the way, if you guys wanted the follow button, we're going to be streaming exactly 6 hours from now at 8 p.m. I stream every single day. If you wanted the follow button, I stream every Sunday this exact same time. I do 2 streams every Sunday. I stream every day, and I literally sell nothing. I have no course, book, WhatsApp, Telegram. I'll never ever follow you, never DM you. Someone said, was that you that DM me? No, I'll never, DM you or follow you, not in a mean way, but yeah. Can we look at Futu? Yo, Smokesy, yo, we looked at Futu a few times. By the way, this brokerage I'm on, if you're wondering, this app I'm on right now, this brokerage I'm on right now, this is this app publicly traded. And even, by the way, this is my favorite brokerage to keep stocks on. Even if this company were to go bankrupt, you're still FDIC insured for $250K, but they're printing money, $330 million net income, 50% net margins, brokerage commissions, interest revenue, crypto revenue are all off the chain. So Futu, and they're about literally a month, I think, on December 2nd, they're going to announce another special dividend. I do own them, full disclosure. But yeah, by the way, if you want to get this brokerage I'm on, this is my favorite one to buy stocks on. Yo, I gotta, because I have to be legit upstairs in 30 seconds, so I have to go right now. That's why I'm talking fast. But yo, if you want to get this brokerage I'm on, it's in the link tree in my bio, that very first link there. But I'll see you guys very soon. Hey, if you're still on the stream, please hit the like button, follow button before you go. But yeah, thank you to everyone on the YouTube stream specifically. We'll be live in 6 hours exactly. See you very soon.